and look into section 11 exemptions under GST. In this exemptions under GST, always whenever you are writing about the exemption, you ensure that you are giving the reference of section 11. Section 11 of CGST Act read with notification number 12 of 2017, and you need to give proper justification also whenever you are writing the exemption, not just it is exempted. So few points about that also you should be writing. So say this, section 11, government on the recommendations of the GST Council can notify goods or services exempted from GST. And there is one more section, section 11A of CGST Act. Section 11A of CGST Act says that government on the recommendations of the GST Council may not recover GST, short levied or not levied, as a past general practice. Past general practice means usually say or maybe some years before also there may not be any tax on that particular transaction, and people were accustomed in not making payment of GST on that particular transaction. But suddenly government is bringing that in the Finance Act that you need to pay GST on this transaction like that. But so far people were not paying. Now what people will do, definitely they will make a protest. So when they make a protest, immediately government will tell, okay, so we can do that, but we can't do it because we have to take the parliament approval. Whenever the parliament proceeding is happening, at that time we will place a request in the parliament, because this will come through a Finance Act amendment. So Finance Act amendment means again anything out of that they need to go to the parliament only. For that reason, so far this provision was not there, and they added wherein no need to go for parliament approval. So on the recommendations of council, government itself can waive off or can reduce the rate. That is this. Government on the recommendations of GST Council may not recover GST, short levied or not levied, as a past general practice. As a past general practice. Then next we have some exemptions, and these exemptions, so I have given like sector wise exemptions. Look into the first one, agriculture related services. So any service in relation to agriculture or agricultural produce is exempted. So that is, I am providing service in relation to agriculture, or I am providing service in relation to agricultural produce, and I receive some money towards that. Whatever money that I am receiving, that will be exempted. And so here agriculture is not exempted, because agriculturist is not at all required to pay any GST, because they are exempted from registration. There is one agriculturist and they are carrying out agriculture, or there is some agricultural produce. I am providing the service in relation to agriculture or agricultural produce. What is the meaning of agriculture? Agriculture means the carrying out cultivation or rearing of life forms of animals. For what purpose rearing of life forms of animals? For food, fiber, fuel, raw material, or any other similar products. So sericulture, silkworm farming will come because it is for fiber, sheep farming will come because that is for fiber, and then poultry farms, fisheries and all will come because it is for food, like that. Cattle rearing for the purpose of fuel, so or honeybee farming for the sake of raw material. So all these, even though not cultivation of plants, rearing of all life forms of animals. Rearing means taking care of for reproduction, and all forms of animals except horses. Why horses is excluded? Why only horses is excluded? Horses is no way connected to agriculture. That's why horse is excluded. Why only horses? Because only horses are allowed for rearing, and all other animals which are there like wild animals and all not allowed for rearing, or some endangered species of animals also not allowed for rearing. That's why it is not given. Whichever animals which is allowed for rearing, in that, so horses is no way connected for food, fiber, fuel, raw material or other similar products. That's why it will not come under agriculture. Whereas agricultural produce means the primary produce out of agriculture on which no processing is done, or some processing as is usually done by a cultivator, which does not alter its essential characteristics but makes it marketable for primary market. So that is the meaning of agricultural produce. For example, tender coconut is agricultural produce and which no processing is done, and that tender coconut we keep for some more days and we peel off the layer and we get the coconut. So that coconut will also come under agricultural produce, because that process is usually done by the cultivator, which does not alter its essential characteristics. And paddy is agricultural produce, but rice is not an agricultural produce, because paddy to rice is not usually done by cultivator, it is done by the rice mills. Here they use the word usually done by cultivator. So paddy is an agricultural produce, but rice is not an agricultural produce. Then in case of rice, only loading, unloading, packing, storage or warehousing is exempted, but other activities will not be exempted, even though rice is not an agricultural produce, but they have given this. What about these activities for agricultural produce, which is already covered in the first point? Because any service in relation to agriculture or agricultural produce is covered. So loading, unloading, packing, storage of agricultural produce is already covered under the first point itself. So therefore, rice only separately we have these 4 activities: loading, unloading, packing, warehousing. Also one more, warehousing of minor forest produce and warehousing of cereals, pulses is also exempted. Is cereals and pulses agricultural produce? No, because these are processed like dals, etc. Whereas minor forest produce is also not agricultural produce, because minor forest produce is something which is available in the forest. No one is going there for cultivation of that. So even though these 3, rice, cereals and pulses, minor forest produce is not agricultural produce, but its warehousing is exempted. Then artificial insemination of livestock. So through injections they give the reproduction. So that particular injections, so other than horses, artificial insemination other than horses, because horses is anyhow excluded from agriculture for that reason. So these are the 5 exemptions that we have in relation to agriculture services. In that you can see the note, warehousing of fruits and vegetables and other agricultural produce is covered in the first point itself, that is service in relation to agriculture or agricultural produce. Then next one you can see number 2, insurance services. Insurance services, point number 1, so there is NPS trust, National Pension System Trust, which will be collecting some premium for the providing insurance, for the purpose of providing insurance, as well as they will also provide pension services. So whatever money that is collected by them, that is premium collected, is exempted fully. Then group life insurance, so people will form an insurance fund, group of people, and they will contribute monthly towards that particular fund. And this group insurance funds are famous between many professions also, even CAs also, but not all group insurance funds is exempted. Only Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces, towards that group insurance fund the contribution made will be exempted. Then service of general insurance business. So general insurance business provide under government notified schemes. So first of all, it should be a government notified scheme, and the general insurance can be provided by any insurance company, whether it be a private insurance company or a government insurance company, but the scheme should be notified by government. And definitely this scheme will be targeted for agriculture and farmers, below poverty line, women and unemployed. For example, failed well insurance, agriculture and farmers, and hut insurance, below poverty line. Like that, they will be giving the scheme. By reading the scheme itself, you will know that it is notified by government. Therefore, the premium collected under that scheme will be exempted. Then life insurance under various government schemes. So there is a life insurance company which is providing life insurance service. Again, that scheme is notified by government. How do we know that it is notified by government? That scheme will end with the word Yojana, Pradhana Mantri Bima Yojana, Aam Aadmi Bima Yojana, like that. So definitely it is a government notified scheme. The premium collected will be exempted. Apart from that extra, we have to remember one more point, that is micro life insurance. Micro life insurance means, like small premiums will be collected, where the sum assured is 2 lakhs, does not exceed 2 lakhs, means the maximum sum assured will be 2 lakhs. So the premium collected will be exempted. Then insurance services provided to government is exempted, but insurance services to government means government also will take insurance on the property or insurance on the life of the people. So that premium paid by them will be exempted. And next, F, reinsurance of any exempted insurance is also exempted. So whatever the 5 points that we have seen above, in these 5 cases, if the main insurance is exempted, its reinsurance is also exempted. For example, I am insurance company A, I am providing insurance to government in relation to their property, and the outlay, that is sum assured, is 100 crores. I have huge risk. For that reason, I'll take reinsurance with another insurance company B for 40 crores, and whatever premium I receive, some premium I will share with them. So my premium is exempted. So the premium which I shared with them is also exempted. So therefore, as the main insurance is exempted, its reinsurance is also exempted. And in relation to that, they have given one clarification. That clarification says that retrocession is also exempted. What is retrocession? That is reinsurance of a reinsurance. So reinsurance of a reinsurance, further reinsurance is known as retrocession, that is also exempted if the main reinsurance is exempted or the main insurance is exempted. Again I am repeating, so I provided government services to government, insurance service to government, which is exempted. Now I paid money to another reinsurance company, that is also exempted. That reinsurance company in turn and now paid money to another reinsurance company, that is also exempted. So last point you can see, reinsurance includes retrocession, that is reinsurer further transferring risk to another insurer. Therefore, if reinsurance is exempted, retrocession is also exempted. Then next you can see G point, service provided by business facilitator or business correspondent. Business facilitators and business correspondents will be appointed by insurance company for the purpose of expanding their business operations, and these people receive commission, and if they are working in rural area, the commission earned by them will be exempted. Service provided by business facilitator or business correspondent to insurance company in rural area is exempted. The same point we have even for banking services also. Then look into banking and other financial services. Point number 1, transaction in money. So transaction in money, if it is not for consideration, then it is neither goods nor services. For example, I am having $100 and you are giving me $1 equals to 85. So that is a market rate. $1 equals to 85, $100 I am giving you 8,500 you have given. It's a pure transaction in money without any consideration. What if you are collecting some currency conversion fee or currency markup fee? Then that is an extra consideration that will become supply of service. Purely transaction in money is neither goods nor services. But in the transaction in money, if there is some extra consideration, that consideration will be treated as supply of service. If that consideration is represented by way of interest or discount on loans, advances, deposits, then it will be exempted. What if that is other consideration, like say for example NEFT charges, RTGS charges, credit card charges, debit card charges, DD commission, etc. all those will be taxable, and even credit card interest is also taxable. Generally interest is exempted, but credit card interest will be taxable. And remember, only discount is exempted, but discounting charges is not exempted. Discounting charges will be taxable. For example, you are taking a bill of exchange and you are discounting that bill of exchange with the bank, for which the bank will be charging some discount, means nothing but interest they will deduct upfront, and then in that case no issue. But if they say discounting charges, for doing this discounting they will collect some charges, that charges will be taxable. So for a separate consideration, and it is treated as supply of service, and if the consideration is interest or discount, it is exempted. Any other consideration including interest in case of credit card, that will be taxable under FCM. Suppose if it is without consideration, such transaction is neither goods nor services. Next, services provided by banking company to basic savings deposit account holders under Pradhan Mantri Jan Dhan Yojana. Under PMJDY scheme, some people were given the nil balance accounts. To those savings account holders, if the bank provide any services for which the consideration collected by them will be exempted, that is this. Then foreign exchange transactions. Foreign exchange transactions between whom? Between banks and forex dealers. Banks and forex dealers will be exempted. Only between banks or forex dealers and the customer, that will only be taxable. Then next one, fourth point, services by an acquiring bank to any person in relation to settlement of an amount up to 2,000 in a single transaction. That is, whenever you are using your debit card, credit card, charge card or any other card, so when you swipe the card, so in that case there will be some processing fees. Always there will be processing fees, but on that processing fees GST will be exempted if the swipe amount or the transaction amount is up to 2,000 rupees. For example, if the transaction amount, means whatever is the swipe amount is up to 2,000, even then processing fees will be there. Processing fees is not exempted, but the GST on processing fees will be exempted. That is this. So GST on processing charges for a transaction up to 2,000 is exempted. Then there is a intermediary. That intermediary is located in multi-service SEZ. So multi-service SEZ in Gift City, and that is the only multi-service SEZ. So in that multi-service SEZ, there is a intermediary who is having IFSC status, and they are providing services to their customers outside India. For that they will be getting some consideration. Then in that case that consideration will be exempted, but they should not be dealing with Indian rupees, they should be dealing with foreign currency. Won't it become export of service? No, it won't become export of service, because in case of intermediary services under section 13, that is supplier in India, recipient outside India, the place of supply under section 13 will be location of supplier. As the supplier is in India, it will never become export of service. In order to become export of service, the place of supply should be outside India. So service by an intermediary of financial service located in a multi-service SEZ with IFSC status to a customer located outside India, for international financial service in currencies other than Indian rupees. Such intermediary can receive consideration either in Indian rupees or in foreign currency for their services, and their services will not fall under export of service. Why? Because place of supply will be location of supplier. Then next, here one more point which is actually coming in service under RCM, but you can write here itself for connection point. So point number 6 you can write services provided by business facilitator or business correspondent. Services provided by business facilitator or business correspondent or agent of business facilitator or agent of business correspondent. So in rural area is exempted. Okay. So this point we will come across in list of service under RCM. There we have exemption related to this. You can connect it here. Business facilitator, agent of business facilitator, business correspondent, agent of business correspondent earning commission from rural area will be exempted. Okay. So they are not required to pay any GST. But here if you see insurance, there is no agent of business facilitator, agent of business correspondent, just the business facilitator, business correspondent. But in banking service, if you see business facilitator, business correspondent, extra what we have is agent of business facilitator and business correspondent. Then we are moving on to health services. In health services, there are two exemptions. Exemption number 1, healthcare service provided by a clinical establishment or an authorized medical practitioner or paramedics, including ambulance service, will be exempted. What is a healthcare services? Healthcare services means pre-treatment, before treatment, that is diagnosis, then treatment, then care. Care means post-treatment. For what? For any disease, illness, injury, pregnancy. In what? In any recognized system of medicine. So that can be any recognized system of medicine like Siddha, Unani, Ayurvedic, etc., homeopathy. So that will be exempted, including transportation in ambulance. So transportation in ambulance may be as a part of healthcare service or separately also ambulance is given. So whether the transportation of patient in ambulance is a part of healthcare service or separately, whatever it may be, means the hospital is not providing any healthcare services. They just provide the ambulance service. There are a lot of private ambulance operators who provide only ambulance services. That is also exempted. Till the time it is transportation of patient, it is exempted. If it is transportation of dead body in the ambulance, it is not a supply. Suppose if it is transportation of a passenger in ambulance, then it will be taxable, because there is one question like that in ICAI. Now they have given one MCQ, that is if an ambulance is transporting the patient, drop the patient in the hospital, while returning they will be boarding in passengers and collect 500 rupees from each passenger, whether it will be taxable or not. It will be taxable. Only transportation of patient in ambulance is exempted. What about renting of ambulance? For renting of ambulance, we don't have any exemption. Renting of ambulance will be definitely be taxable. We don't have exemption in that regard. Only transportation of patient in ambulance is exempted, whether it is part of healthcare service or not part of healthcare services. Then coming back to this. So first, healthcare service means what? Treatment, before treatment, that is diagnosis. After treatment, that is care. For what? Any illness, injury, deformity, abnormality, including pregnancy, in any recognized system of medicine. It includes what? Ambulance services. And one more point you can see, it excludes cosmetic surgery, plastic surgery and hair transplantation. However, it includes, that is the healthcare service includes these three, that is cosmetic surgery, hair transplantation and plastic surgery. If these are to these are carried out to restore the anatomy of body parts affected due to congenital defects, that is by birth, or developmental abnormalities during the growth, or any injury or trauma. For example, fire accident, for that they have carried out the plastic surgery. Definitely it is treated as healthcare service and it is exempted. That is the meaning of healthcare service. You need to remember. You need to remember so far agriculture definition, agricultural produce definition, and this healthcare definition also you need to remember. Because in exam when they give the question, you need to write some justification. For that you need to connect to the definition and you need to write. So healthcare services by clinical establishment. What is a clinical establishment? Any place where healthcare service is provided is known as clinical establishment. Authorized medical practitioner. Who is an authorized medical practitioner? The one who is having minimum MBBS degree and is registered with the medical council is known as an authorized medical practitioner. Or paramedics. Paramedics is the person who assists the authorized medical practitioner, like nurse, lab technician, physiotherapist, compounders. Those people will come under paramedics. Even their service is also exempted. And whether all the services, all the healthcare services and other service also which is part of healthcare service is exempted. Yes, everything is exempted. Even food supplied to inpatients. Inpatients means those who are admitted in the hospital is exempted. Even medicine sold to inpatients is also exempted. Even room provided to them is also exempted. But in case of room, the charges should not exceed 5,000 rupees per day. If it exceeds 5,000 rupees per day, entirely it will be taxable. In everywhere in exemptions, you remember wherever the monetary limits comes, if you are crossing that monetary limit, entirely it will be taxable. Only exception is Incubator Services. But in all other place, if you cross that limit, entirely it will be taxable. Suppose if it is ICU, CCU, ICCU or NICU, suppose if it is ICU charges, it will be always exempted. That 5,000 point will not be applicable. If it is other room charges, the charges does not exceed 5,000 rupees per day exempted. The charges exceeds 5,000 rupees per day, then entirely it will be taxable. Then you can see, so another exemption, healthcare service in relation to animals or birds. So far whatever we have seen is healthcare service in relation to human beings, healthcare service in relation to animals or birds is also exempted. Then there are three circulars. Number one, renting of room to inpatients in hospital and food supplied to inpatients is part of healthcare service and it is exempted. But renting of room to inpatient is exempted to what extent? Only to the extent of 5,000 rupees per day, not indefinitely. Then service provided by consulting doctors to hospitals is exempted. There is a consulting doctor who will not directly provide the services to the patient, will be providing service to the hospital, and the hospital will provide service to the patient. Means patient will pay 500 rupees. Out of that 500 rupees, say 300 rupees will be shared by hospital with the doctor. 500 rupees received by hospital is also exempted. That 300 rupees received by the doctor from the hospital is also exempted. Then services provided by way of ART or IVF. ART, that is assisted reproductive technology or in vitro fertilization, that is mainly to treat infertility. So this is covered under healthcare services and therefore it is exempted. Then next one, so exemption with respect to rehab services. So these rehab professionals are not doctors, they are psychology experts. They will be working in medical establishments, they will be working in education institutions, they will be working in rehab centers for the purpose of providing the care or counseling, so to cure the mental diseases, and whatever money that they are collecting will be exempted. If they are working in healthcare like establishment, medical establishments, so it can be public or private or trust owned, whatever it may be, it is exempted. Education institutions also, let it be government or private or trust owned, it is exempted. But rehab centers, only it should be government or trust owned rehab center, then only their service will be exempted. If they are working in private rehab center, then it will be taxable. Service provided by rehabilitation professionals in private rehab center will be taxable. Then next you can see entry tickets. So following are the entry tickets which are exempted. Irrespective of ticket price, some entry tickets are exempted. If the ticket price does not exceed 500 rupees, some tickets are exempted. First, irrespective of the ticket price, only 6 entry tickets you have, you need to remember. 3 related to animals: zoo, wildlife sanctuary, tiger reserve, these 3. And then 3 places: museum, national park, and then we have protected monuments. So these 6 places, entry ticket is exempted, whatever may be the ticket price. But remaining, we have 9 entry tickets which are exempted if the ticket price does not exceed 500 rupees per person. What if the ticket price exceeds 500 rupees per person? Entirely it will be taxable. So what are they? 4 performance related: musical performance, theatrical performance, then concert and dance performance. Okay, concert, musical performance is connected only, and therefore 4 performances. What are they? Musical performance, then concert, theatrical performance and dance. Then 4 events. First 4 performance, then 4 events. 4 events, that is circus, award function, pageant and sporting event. Then we have planetarium, 1 place. These are the 9 entry tickets. Ticket price is exempted. Then if the ticket price does not exceed 500, then you have pension services. In this pension services, there are only 2 pension schemes which are exempted. One is central government pension scheme, that is Atal Pension Yojana. Another one is state government notified pension or operated pension, that is exempted. There is something called as unified pension scheme, like that, newly launched. Whether that unified pension scheme is given in the list? No. Suppose in exam if they give unified pension scheme, don't conclude that it is a notified pension scheme, therefore it is exempted. No, it will be taxable. Okay, only Atal Pension Yojana and state government operated pension fund is exempted. Then services by specified organizations. So these are the specified organizations, that is services provided by Employee State Insurance Corporation, Employee Provident Fund Organization, NCCCD and CMPFO, that is Coal Mine Provident Fund. NCCCD is National Center for Coal Chain Development. So all these organizations, if they collect any amount, that will be exempted, including Foreign Diplomatic Mission in India. Who is Foreign Diplomatic Mission in India? UN or international organizations or embassies or consulates, they are also exempted. So whatever money that they are collecting, they are not required to pay GST, they are exempted from payment of GST. That's where they are called as UIN holders. So their outward supply will be exempted, but on their inward supply, whatever GST paid, they can get it as a refund. Then next, charitable and religious services. In this charitable and religious services, there is a entity which is registered under section 12AA of Income Tax Act. That particular entity, charitable trust, either 12A or 12AB, wherever 12AA comes, the 12AB will be coming there. So service by an entity registered under 12A or 12AB of Income Tax Act by way of specified charitable activities. Only specified charitable activities will be exempted. What are specified charitable activities? Number 1, public health. Number 2, that is advancement of religion, spirituality and yoga. Then all Baba Swamijis will come in this aspect. Public health means like it can be even awareness. So health awareness also will be coming under public health. Then educational programs. Educational programs to whom? Orphans, physically, mentally traumatized persons and prisoners and persons over 65 years residing in rural area. What if persons over 65 years residing in urban area? Then it will be taxable, rural area. Then environmental preservation, that includes wildlife protection, etc. Then point number 2, services by an old age home. Who is running that old age home? Either central government or state government or a charitable trust. How much they are collecting per month per person? So that is up maximum 25,000, up to 25,000 rupees per month per person. So all inclusive. Then it will be exempted. But here you need to remember, age is 60 years or more. So say this in the second point, they use the word greater than or equals to 60 years. Whereas in the first point, they use the word greater than 65 years. Greater than 65 years. So in the first place, that persons over 65 years residing in rural area, that is greater than 65 years. Whereas here, old age home point, it is greater than or equals to 60 years. Don't get confused between these two. Then service by any person by way of conduct of religious ceremony. So purohit or priest, etc., they conduct religious ceremony, the money earned by them will be exempted. Services by specified organization for religious pilgrimage. What are considered as religious pilgrimage? Kailash, Manas Sarovar and Hajj Yatra will be considered as religious pilgrimage. Then incubator and incubatee services. So there is an incubator who is owning the incubate. Incubate is a place where research is carried out. Incubator is the owner of that particular incubate. Incubatee is the one who is providing services inside the incubator, and that is inside the incubate. Incubatee services will always be exempted if it is up to 50 lakhs. Services provided by incubatee is exempt up to 50 lakhs. What if it crosses 50 lakhs? Here alone, the excess is only taxable. In all other places, if it crosses a limit, entirely it is taxable, but here only the excess will be taxable. And there are two conditions. Condition number 1, previous year they should not cross 50 lakhs, and this exemption is applicable for a period of 3 years from the agreement date. Then services provided by incubator will always be exempted if they are approved by Government of India. So mostly there are two approved incubators, Technology Business Incubator and Science and Technology Entrepreneurship Park. These are the two approved incubators, and services provided by them to any person, fully it is exempted. So you can see the illustration here. So first year gross receipts by incubatee 60 lakhs. By default first year they will get the exemption because previous year it is 0 and 50 lakhs will be exempted. So only the remaining 10 lakhs will be taxable. Whereas second year they will not get exemption. Why? Because second year we need to see the first year. First year it does not exceed 50 or exceeds 50, exceed 50. That's why second year you will not get any exemption, and therefore 40 minus 0, 40 lakhs will be taken as the taxable value. Third year gross receipts of incubatee will be 70 lakhs, and whether they will get exemption? Yes. Previous year it does not exceed 50 lakhs. So therefore third year they will get exemption, 70 minus 50. So 20 lakhs will be taken as the taxable value. Then next one, education services. You can see in education services, point number 1, services provided by an education institution. To whom they are providing the services? To students, faculty and staff. That will be exempted. What is the meaning of an education institution? Category 1 education institution up to 12th standard or equivalent. Starting can be anywhere. It can be nursery, daycare, or LKG, pre-KG, etc. anywhere, but the ending point should be 12th standard or equivalent. And category 2, education for obtaining a qualification. That qualification should be recognized by law. For example, there is a ACCA center. The institution is in India, and if you pay registration fees to ACCA, will it be taxable or exempted? Taxable. Why it will be taxable? Because that is not a qualification recognized by law. Then category 3, approved vocational education. So what is the meaning of approved vocational education? You can see in the next page I have given. Approved vocational education means a course run by ITA or ITC, Industrial Training Institute or Industrial Training Center, which is affiliated to NCVT. NCVT refers to National Council for Vocational Training. SCVT refers to State Council for Vocational Training. Like how in school there is State Board CBSE, like that NCVT, SCVT offering courses in designated trades under Apprentices Act or modular employable skill course under Ministry of Skill Development and Entrepreneurship. So they are basically approved vocational education, and these 3 education institutions, if they are providing services to students, faculty and staff, is exempted. If they provide service to any other person, for example, there is a college which is providing services to the corporates by way of allowing the corporates to do the placement, so that is recruitment, etc. For that, whether it is taxable, of course it is taxable, because the recipient is other than student, faculty and staff. So therefore it is taxable. If it is to students, faculty and staff, any service including transportation, catering services to them, or any other fees that is collected from them, everything will be exempted. Then what about the application fee or entrance fee collected, or fee collected for issuing eligibility certificate? Basically these fees are collected from the persons who are going to apply for the institution. So but they are not at the students. Even then it is exempted, yes, because they are coming under prospective students. So application fee or eligibility fee or prospectus fee, all these are also will be exempted because they are going to join in the college, so or join in the school, so that will be exempted. Same way, migration certificate or a transfer certificate, so they are leaving the school. As they are leaving the school, they are paying this. So even though they are not students of the school, at that time when they pay transfer certificate fees, etc., but they are ex-students, so due to that reason it will be exempted. But ex-student should be like only for this purpose. So suppose if 2 kids have grown up and they are getting married in the school, and if they take school premise on rent, the rent and all will not be exempted because they are big ex-students. Got it? So X means like small x only, very near. Got it? So that is this. Then service provided to an educational institution. First one is services provided by an educational institution. Next one is services provided to an educational institution. In this service provided to an educational institution, transportation, catering, security and housekeeping, these 4 services, only to category 1 institution it will be exempted. So security and housekeeping should be within the premises. And then admission to within the premises means, for example, a school is conducting like in an auditorium one function, annual day function. For that annual day function, if they receive housekeeping or security service, can they take it? Whether it will be exempted under this, even though category 1 school is a category 1 institution, but it is not within the premises. Due to that reason, it will be taxable. Whereas catering and transportation, that will be exempted even to the student event also. Suppose if they receive catering service for the student event somewhere in auditorium, whether it is exempted? Yes, because catering need not be within the premises, transportation need not be within the premises, so therefore security and housekeeping only should be within the premises. What if these 4 services took other category institutions? It will be taxable. It is not exempted. Then admission to or conduct of examination, all 3 category institutions it will be exempted. Online periodicals and journals, only category 2, because online periodicals and journals are required only for category 2. Category 1 and category 3 it is not required. Then next one we have exemption provided to services supplied to an educational institution, including Anganwadi schools. Anganwadi schools will be providing daycare services to the children, so kids, and they will also be providing food facility to the kids, so that they will be receiving catering services. So they will come under category 1 institution. So category 1 institution, catering service provided to them is exempted, but they may not pay the money. The money may be paid out of government grants or corporate donations, whatever it may be, but the service is provided to them only na. So therefore it is exempted. That is this circular. Then IIMs. IIMs are also treated as education institutions. So any services provided by them to its students, faculty, staff is exempted. However, if the IIMs are providing courses wherein a a degree or a diploma is given, then only it is exempted. Means long term courses greater than 1 year, it is exempted. So where the diploma or degree will be given. What if it is a short term courses less than or equals to 1 year, which will be taxable, where there is only participation certificate. So you see the timing. So greater than 1 year, exempted, less than or equals to 1 year, it will be taxable. Then service provided by an education institution by way of conduct of entrance examination. Generally some education institution will conduct entrance examination for the purpose of giving admission there, but those people who write the entrance exam are not yet the students. Even then the entrance exam fee collected from them will be exempted, but it should be by an education institution. What if there is an examination body whose job is only to conduct the entrance exam and give the score? Based on that, they will be joining in the colleges. Whether those examination bodies also will come under education institutions? Yes, because for the limited purpose of conducting the entrance exam, so without writing the entrance exam, they will not become a student, they will not get a qualification. So it is part of curriculum for obtaining a qualification. So those examination boards like National Board of Examination or National Testing Agency will also be treated as education institution, and the fees collected by them, entrance exam fee collected by them, is exempted. Then next one, point number 5, amount paid to training providers under DDUGKY scheme, Deen Dayal Upadhyaya Gramina Kausalya Yojana scheme. So there will be some volunteers who will go to the rural area and will be providing training, for which they receive some honorarium or some charges from the government, that is exempted. Next one, any service provided by National Skill Development Corporation, NSDC, and below NSDC there are a lot of sector skill councils, and in each and every sector skill council there will be 3 types of bodies. One is training body, which will conduct the coaching, and next is assessment body or assessment agency, which will conduct the exams, and awarding body, which will be giving the certifications. So these 3 people providing the skill courses will be exempted: awarding body, assessment agency, training body. Previously we did not have, they were calling it as, like the assessment partner or training partner, like that they were calling. So but they have just brought in awarding body, assessment agency, training body. And in relation to any scheme implemented by NSDC or any vocational skill development course under national skill certification or any national skill qualification approved by NCVT, that is National Council for Vocational Education and Training. So these 3 people are exempted. That's the latest amendment. Then services by assessment bodies under skill development initiative. Under skill development initiative, some people will be brought into the assessment body, and they will do the review of curriculum, and they will suggest the changes that will be imparted to the students. So these assessment body people will receive some money from government, that is exempted. That is this services by assessment bodies under skill development initiative scheme. Then point number 8, affiliation services provided by Central State Education Board to a school established or owned by government. Very important. So affiliation fees, usually CBSE and state board. Okay, so CBSE as well as state education board, they will be collecting affiliation fees from all the schools, private schools as well as government schools. But which fees is exempted? Only collected from school which is established, owned or controlled by whom? Central government, state government, local authority. GA means government authority, GE means government entity. So government authority, government entity, so means what? Government authority, government entity, both are body or authority or board established under an act of parliament or state legislature, and or in which the government has invested greater than or equals to 90%. But the difference between these two is that government authority will carry out the functions under constitution, whereas government entity will be established for the purpose of promotion of trade and commerce. So that is the difference between these two. But whatever it may be, so if the affiliation service is provided by government board, central or state education board, to the schools, then it is exempted. What if they are providing to private schools and all? That will be taxable. So write down there, affiliation fees collected from private schools. Affiliation fees collected from private schools is exempted. Affiliation fees collected from private schools is taxable. Affiliation fees collected from private schools is taxable. Only from the schools which are owned, established or controlled by these people, it is exempted. Then this is the latest amendment. You can see one point in this regard. These are the special points. Fee collected by ICA or ICMA is exempted as their education institution. However, fees collected by coaching centers or individual faculties will not be exempted and it will be taxable. Up to 12th standard, it can be in any board, either CBSE, state board, matriculation or ICSE. Private tuitions and home tuitions will always be taxable. Then next we are looking into services provided by government. Services provided by government. So now there is some change in the chart. So because only municipality or gram panchayat is covered under exclusion from supply. Sovereign functions of government means only municipality functions or gram panchayat functions. So services provided by government, either central government, state government or local authority, divided into two. So there are two activities which are excluded from supply. What are they? Panchayat or municipality as per constitution. So what is that as per constitution? Article 243G or 243W of the constitution or 11th and 12th schedule of the constitution. They have listed out some activities. By doing that activities, if they are getting some money, who is getting the money? Municipality or gram panchayat. That money collected by them will be exempted. Then another point is exempted or excluded from supply. Excluded from supply. Then liquor license granted by state government. So state government will be granting license to sell the liquor. That license fee collected by state government is also excluded from supply. Apart from these two, all other activities of government will be covered under supply. In those activities which are covered under supply, we have Department of Post. Services provided by Department of Post. In services provided by Department of Post, we have 3 exemptions. Only 3 exemptions. Rest of the cases it will be taxable. What are they? Inland letter, postcard, registered post or book post of envelope less than 10 grams. So this is no change. Previous also the same, now also the same. Other activities will be taxable. What are other activities of Department of Post? Speed post, express parcel post, life insurance, etc. that will be taxable. Then next one, services by Indian Railways. Services by Indian Railways, we have following are exempted. Services to individuals by way of sale of platform tickets or facility of waiting rooms, clock rooms, battery operated cars. So they will be providing platform tickets. So previously platform tickets was taxable, now it is exempted. And platform tickets, then next waiting hall charges, and number 3 clock room charges to keep the luggage, then battery operated car services. These 4 services, what are the 4? Platform tickets, clock room charges, waiting room charges, battery operated car services to the individuals is exempted when it comes to services by Indian Railways. Then second exemption, services by one zone or division to another zone or division. Generally railways are divided based on zones like southern zone, south central zone, like that they will be dividing the railway zones, and based on the division, again below that, like based on the zone there will be lot of divisions. We call it as junction, na? So like one junction will be one division, and one division to another division, one division to one zone or zone to division. So between them if there is any services, that is exempted. So services by one zone or division to another zone or division is exempted. Then maintenance services to SPVs. So we need to understand about this special purpose vehicles little bit. So what is this special purpose vehicles is about? Listen, generally there are lot of railway stations wherein some infrastructure will be built by special purpose vehicles. This infrastructure will not be built by Indian Railways, but this infrastructure will be built by special purpose vehicles. So special purpose vehicles. So what these special purpose vehicles will do? Will create the infrastructure, okay? Will create the infrastructure. So they will create infrastructure. For example, you keep in your mind, so lifts and escalators inside the railway station is created by a special purpose vehicle. Why can't railways do that? Railways don't have money. So therefore this special purpose vehicle who is having money, they will create that, okay? So create infrastructure, and what they will do? This special purpose vehicles will give the infrastructure for use to Indian Railways. So to Indian Railways, they will be allowing Indian Railways to use the infrastructure. So they will be giving infrastructure for use. So right to use infrastructure, right to use infra created. Right to use infra created. Who created infra? The special purpose vehicles, and that will be given to Indian Railways, for which Indian Railways is required to pay some consideration, and this consideration will be payable for a period of time. That period is known as concession period. Concession period. Concession period means they work on a BOT model, build, operate, transfer model. First they will build and they will be allowing Indian Railways to use it, and for a period of time, say 5 years or 10 years, for which Indian Railways will be paying money. So this is like recovery of money for the special purpose vehicles, and thereafter the entire infrastructure will be given to Indian Railways. During the concession period, the consideration will be received. What is the treatment of this particular consideration? This consideration is exempted. This consideration is exempted. They are not required to pay GST with respect to this. Okay. Now, this is one exemption. Is it service provided by government or service provided to government? It is services provided to government. So, this point is there under services provided to government. In third point I have given below, services provided by special purpose vehicle to Ministry of Railways by allowing them to use the infrastructure built and owned by SPVs during the concession period against consideration. That is this special purpose vehicles gives the infra to Indian Railways, for which they pay consideration, that is exempted for the concession period. Now what will happen is that, so this infrastructure is owned by whom? This infrastructure is owned by whom so far up to concession period? Special purpose vehicles, not Indian Railways, means they only should do the maintenance of it. But what happens, it is difficult for special purpose vehicles to do the maintenance, because every time when the lift is repaired, you cannot call them to come and do the repair. But Indian Railways will have lot of people with them who knows how to do the repair, etc., because they have a number of engineers with them. So therefore, what Indian Railways will do, will provide the maintenance services. Indian Railways will provide maintenance services to special purpose vehicles. Okay. So maintenance services they will provide. Maintenance services to such infrastructure. Maintenance services to such infrastructure. Okay. So Indian Railways will be providing maintenance services to such infrastructure, for which the special purpose vehicles are required to pay maintenance charges. Why they need to pay maintenance charges? See, that infrastructure maintenance is the liability of the special purpose vehicle, but they are not doing it. So Indian Railways is doing, so for which they need to pay maintenance charges. What is the treatment of these maintenance charges? That maintenance charges is also exempted. So that is also exempted. So therefore, we have two transactions which are exempted. One is, so services provided by SPVs to Indian Railways, for which they get a concession, consideration during concession period, that is exempted. During the same concession period, Indian Railways will provide the maintenance services to the infrastructure which is owned by SPVs, for which they will be, like getting maintenance charges, that is also exempted. This is only services provided by government. You can see there maintenance services. Maintenance services to whom? SPVs, special purpose vehicles, in relation to infrastructure built and owned by SPVs. When? During the concession period. Then next, we have transportation of goods or passengers. For that we need to refer the transportation chart, and accordingly we will determine whether it is taxable or exempted. Then we have one more thing, airport or port services provided by government. You just write down here, because it is not exempted, that's why I have not given. Airport or port services, airport or port services provided by government is always taxable. Airport or port services provided by government is always taxable. We don't have any exemption with respect to airport or port services, because airport is owned by Airport Authority of India, port owned by Port Trust of India, government. So but that is taxable fully, we don't have any exemption. Then apart from that, other services. So what are the four services we discussed? First, Department of Post. First classification, services provided by government, so is divided into two. excluded from supply, covered under supply. Panchayat or municipality functions, liquor license, excluded from supply. Other activities, covered under supply. In that, whatever is covered under supply, Department of Post, Indian Railways, transportation and airport or port services. So remaining services, other services to business entities, other services to other than business entities. Other than business entities means individuals will be exempted. So business entity means what? Any person engaged in business is known as business entity. So you just write down there. So what is the meaning of business entity? Business entity means any person engaged in business. Any person engaged in business is known as business entity. Okay. And related to business entities, services provided by government to business entities, we have certain exemptions which is given in segment 3 under RCM. So please take that page. If you want to give the reference, you give the reference to that particular page. You can see that. You give the page number reference, refer page number 26. Refer page number 26. Services provided by government to business entities. So you need to understand as to which place we are right now in. First, Department of Post we covered, then railways we covered, transportation we covered, airport or port we covered, all other services to business entities. What if it is to individuals? It will be exempted. So services provided by government to business entities, RTI charges. There are 14 specific exemptions. In case of these 14 specific exemptions, entirely it is exempted. And thereafter we have 2 general exemptions. So look into 14 specific exemptions, RTI charges, that is RTI, you pay na. So to get your answer sheet, etc. That charges collected by government will be exempted. From you it is exempted. What if it is collected from business entities? That is also exempted. RTI charges is exempted. Interdepartmental services. So one department of central government or state government to another department of central government, state government. Just remember, income tax department receiving services from police department will be coming under exemption. Then right to use telecom spectrum. So right to use telecom spectrum allocated when? Before 1/4/2016. What is exempted? Both one-time charges and annual royalty. Then number 4, right to use natural resources. When it is allocated before 1/4/2016. What is exempted? Only one-time charges is exempted. That's the difference between third point and fourth point. In third point, telecom spectrum. In fourth point, natural resources. Third point, both one-time charges and annual royalty. Fourth point, only one-time charges. Fifth point, right to use natural resources to individual farmer assigned anytime. Both one-time charges and annual royalty. The difference between fourth and fifth is that fourth one is natural resources to any person, but here natural resources to individual. Fourth point, before 1/4/2016, but here anytime. In fourth point, only one-time charges. In fifth point, both one-time charges and annual royalty. Then point number 6, merchant overtime charges under customs, MOT charges. So customs department which will work after office hours or during holidays, they will collect some extra charges, that is MOT charges, which is exempted. Safety certificate charges collected by the safety officer for issuance of safety certificate. Consideration for tolerating an act. So government enters into contract and they are tolerating your breach for which they are collecting some money, that is exempted. Then share of profit petroleum. So profit petroleum refers to the concept of entering into agreement or right to extract petroleum, crude or natural gas given by the government to a leaseholder. So first government will be giving to the leaseholder right to extract petroleum, crude or natural gas, for which the leaseholder is required to pay 2 types of consideration. One is a share of profit, another is annual royalty. Annual royalty will be taxable because annual royalty is not exempted. So if you see assignment of right to use natural resources, only one-time charge is exempted, but annual royalty will always be taxable. So when annual royalty is taxable, what about the share of profit? Share of profit received by them will be exempted. That is this share of profit petroleum. So what is profit petroleum? Revenue from operations. So this leaseholder will extract the crude oil or natural gas and will sell that. That is called as revenue from operations minus cost petroleum. What is cost petroleum? Recovery of expenses by the leaseholder is known as cost petroleum. Whether that recovery of expense is also exempted? Yes. Cost petroleum is recovery of expenses by leaseholder, which is also exempted. Then next one. So the remainder revenue from operations minus cost petroleum minus royalty is known as profit petroleum. Out of that profit petroleum, a share will go to government. that share received by them will be exempted. And this is for what purpose they are getting? For assigning right to extract petroleum, crude or natural gas. Government receives share in profit on extraction in addition to royalty. Then next one, point number 10, registration charges under any law for the time being in force. So that is like sub-registrar collecting registration charges for vehicles or properties, etc. That registration, RTO collecting registration charges, then ROC collecting registration charges for incorporation of a company, all those things. Then fee for certain certificates, birth certificate, death certificate, driving license, visa and passport. So these are the 5 certificates which is given by government to the business entities. If it is given to individuals, anyhow it is exempted. If it is given to business entities on behalf of their employees, so that is also exempted. What are the 5 certificates? Birth certificate, death certificate, driving license, visa or passport. Then guarantee commission for guaranteeing the loans taken by PSUs. Public sector undertakings will be taking the loans. Those loans will be guaranteed by the government. For doing this guarantee, so this PSUs will be paying the guarantee commission. That guarantee commission received by them will be exempted. Then ERCC, excess royalty collection contractor. That excess royalty collection contractor is appointed by the government to do the swapping. That is, they will be receiving fixed royalty or variable royalty, but they will be paying the fixed royalty. So you can see here, so there is government, so government or state government, so then there will be a leaseholder, Now what state government will do? First it will assign right to extract natural resources, assignment of right to extract natural resources, for say rupees 10,000 per ton as royalty. So what is the type of royalty that is received by state government? Definitely they will be receiving a variable royalty in the sense depending upon the number of tons that is extracted. But government don't want variable royalty, they want fixed royalty. So due to that reason, they will appoint one swapping agent called as ERCC. What ERCC will do? ERCC will be receiving variable royalty, and what they will do is that they will pay fixed royalty to government. And say the variable royalty is 75 lakhs and the fixed royalty is somewhere like 60 lakhs. Now what will happen in this case? In this case, to government, that is central government, the leaseholder will anyhow pay GST under RCM. So GST on 75 lakhs. Who will pay? The leaseholder will pay anyhow GST on 75 lakhs, because in case of services provided by government to business entity, it is covered under RCM. So liability to pay GST is on recipient. So therefore GST on rupees 75 lakhs will be payable by leaseholder. So anyhow on 75 lakhs they are paying. So ERCC is not required to pay any GST. Why not required to pay? Because on 75 lakhs, what is the revenue to the government, state government? Only 60 lakhs. But leaseholder already paid GST on 75 lakhs. Excess only they have paid. So therefore ERCC is not required to pay any GST. Suppose if variable royalty is not 75 lakhs, if the variable royalty is somewhere like 50 lakhs, and already leaseholder will pay GST on 50 lakhs. Now fixed royalty is 60 lakhs. So ERCC will pay GST on what? ERCC will pay GST on 10 lakhs. So that is this. So ERCC is exempted to what extent? To the extent of variable royalty. So on the deficiency, what is the deficiency here? The fixed royalty is more than the variable royalty. On the difference, ERCC is required to pay GST. That is with respect to this. So you can see here, excess royalty collection contractor to the extent of variable royalty is exempted. Then fee for granting national permit to goods carriage. Generally permit charges will be collected for the purpose of traveling, that is yellow board vehicles to travel to other states. Those permit charges including national permit charges is also exempted. These are the 14 specific exemptions. Apart from these 14 specific exemptions, we have 2 general exemptions. Any service provided by government to business entity other than renting of immovable property, if that business entity turnover during the previous year does not exceed threshold limit, then it is exempted. Example, advertisement services provided by government to business entity. Advertisement services, nowhere it is in 14 points. So and that business entity is an ad agency, and they started ad agency only this year. So previous year it is 0, means does not exceed threshold limit. Therefore, this advertisement services provided by government to business entity will be exempted. Suppose if it is renting of immovable property, we should not check this first general exemption. Second general exemption we need to see if the value of supply does not exceed 5,000 rupees per invoice. That is applicable even in case of renting of immovable property, and in case of continuous supply of services, it should be 5,000 rupees in a financial year. For example, government owns a shop. That shop is given on rent to a business entity, and whether it is coming under anywhere in the 14 specific exemptions, no. First general exemption also not applicable to renting of immovable property. Second general exemption is applicable for renting of immovable property, but in this case, what is the rent for the shop we need to see. Say the rent for the shop is 500 rupees only per month. Then in that case, is it taxable or exempted? Taxable. Why it is taxable? In case of continuous supply of services. What is a continuous supply of services? Service which takes more than 3 months to complete and involves periodic payment obligations is a continuous supply of service. For continuous supply of services, we need to see in a year 500 rupees per month means in a year it will be 6,000, which is more than 5,000. So therefore it will be taxable. Okay. So it is not exempted. And what if the rent is only 300 rupees per month? 300 rupees per month means 12 into 3, 3,600. It does not exceed 5,000 rupees. Therefore, it will be coming under exemption. So that is this value of supply does not exceed 5,000 rupees per invoice. In case of continuous supply of service, 5,000 rupees in a financial year. So these are the two general exemptions. Apart from this, 2 general exemptions and 14 specific exemptions, any other services provided by government to business entity will be taxable, and wherever it is taxable, it will be covered under RCM. But remember, there are few services provided by government which will not be covered under RCM. What are they? 5 services. In that 5 services, if you remember the chart, in that chart, Department of Post first we discussed, it will never come under RCM, it will be always FCM. Second we discussed railways, it will always be FCM. Transportation will be always FCM, and airport or port service will always be FCM. And in that remaining, so what we discussed, services provided like renting of immobile property services provided by government to whom? Unregistered business entity. So that is coming under FCM. So generally these 4 services provided by government to business entities RCM, but in these 5 places RCM will not be applicable. In case of renting of immobile property to unregistered business entity, and supply of goods or service by railways, Department of Post, transportation of goods or passengers, services by airport or port. Okay. So that is about this. But anyhow, in RCM we need to see that. So we were discussing into the exemptions. Exemptions with respect to services provided by government. So this chart we have completed. Now you can look into various definitions related to government. So government means central government, state government, local authority. And government authority, already I told you, board or body or authority established in an act of parliament or state legislature, board or body or authority in which government has invested greater than or equals to 90% to carry out the functions under constitution. Example, ICI is a government authority, CMDA, Chennai Metro Development Authority is a government authority, CMW SSB, Chennai Metro Water, Sewage and Supply Board. So that is also coming under government authority. And government entity is same as government authority except that it is established to promote trade or commerce. Example, PSUs, those will be ONGC, SAL, that will be coming under government entity. Government agency, like that one word is there. Government agency means the one who is providing services to government. Government is required to do certain activities. They will outsource. For example, it is a job of the government to lay down the road, but they will be giving it to contractors to lay down the road. It is a job of the government to do the solid waste management, cleaning the garbage, etc. But they will outsource it to some private companies. So that will be coming under government agency. Person providing services to government in relation to functions entrusted to government as per constitution. Example, Arbaiser, contract, etc. Arbaiser is a company which is in Chennai, which is engaged in cleaning of garbage, etc. and all. Then contractors who lay down the roads will come under government agencies. Then services provided to government. In services provided to government, so we have the first point, so government authority. But before that, there is one more point here. Services provided by government authority to any person will be exempted. So who is a government authority? Just now we discussed. If they provide services to any person, that will be exempted. Example, RERA, Real Estate Regulatory Authority, is it a government authority? Yes. RERA is a government authority. So if they collect any fees for the purpose of regulating the real estate, whether it will be exempted? Yes. Like that, any government authority collecting any amount will be exempted. So government authority providing services will be exempted to any person. Then any person providing services, any person providing services to government authority, okay, any person providing services to government authority, whether that will also be coming under the exemption, okay. So services provided by any person to government authority is also exempted with respect to certain activities. What are they? Water supply, sanitation conservancy, solid waste management, public health, and slum improvement and upgradation, okay. So these activities, so what are these activities? Easily remember. So when you visualize a slum, okay, in a slum what will happen? So there will be lot of drainage issue. So drainage issue means open drainages will be there, no proper sanitation, and there won't be proper water facility available to them, and because of the sanitation not properly there, so a lot of mosquitoes will come and bite them and their health gets deteriorated, and thereafter so even this garbage and all also will be open here and there. Got it? So now we need to clean this entire thing. So first, water supply, public health, sanitation conservancy, solid waste management, and slum improvement and upgradation. Clear here? So water supply, sanitation conservancy, solid waste management, public health, slum improvement and upgradation. So this will be exempted. Other activities will be taxable under FCM. Then next one, this is services provided to government authority, but service provided by government authority will always be exempted. Then next point you can see, any person providing services to government, and in that services provided to government, so we have few exemptions. Pure services with respect to Article 243 GRW of the Constitution. So what is that? That is, generally government is required to do certain activities as per the Constitution, which they do, that is excluded from supply, and if they outsource it to one person, that person is called as government agency, and if they provide pure services, then it is exempted. Just now we saw solid waste management. Solid waste management is an activity of government, but they outsource it to one private company, and that company will do the solid waste management, for which they get a money. That is a pure service and it is exempted. Then what if it is a composite supply that involves both goods and services? If the value of goods does not exceed 25% of total, then that particular activity will also be exempted. So pure services in relation to Article 243 GRW, composite supply with respect to Article 243 GRW where the value of goods does not exceed 25% of total. Then fair price shops. Fair price shops means ration shops. So ration shop agents will get commission for doing this ration distribution, for which they also get some commission, that is exempted. Then training program where the expenditure borne by government will be greater than or equals to 75% of total. Say there is a coaching center which is providing NEET coaching and the fees is 1 lakh, 80,000 rupees fees. 80,000 rupees fees is borne by government. Whether the training program is exempted? Yes, because greater than or equals to 75% of total. Suppose if 70,000 fees is borne by government, then what is your answer? Then the training program is not exempted. Why? See the condition. Training program expenditure borne by government greater than or equals to 75% of total. Then next one, import of services. So import of services by government other than OIDR services. For what purpose? For other than business or commerce. So these are the services provided to government, it will be exempted. All other activities will be taxable. And what about these services, water supply, sanitation, conservancy and solid waste management, that is coming under the first point. See, if this is provided to government, also government authority also exempted. If it is provided to government also, it is covered under the first point. You can see all above services like water supply, solid waste management, etc. provided to government falls under pure service and it is exempted. Third point already we discussed. Now government entity. For government entity we have only one exemption. There is a government entity which is providing services to government or any person specified by government, for which they get a grant. That grant will be exempted. Then government authority, all services provided by government authority is exempted. So even RERA is a governmental authority and statutory collections made by RERA is covered under exemption. But government entity is not same as government authority, except that there is a change. Government authority means to carry out functions under constitution, but government entity is not established to carry out functions under constitution. So whether the services by government authority exemption is applicable to government entity, no. So the above exemption is not applicable to government entity. Then we have, so there is some accommodation services provided by Air Force mess or similar mess to its personnel or in relation to other than business entities, and it will be exempted. So what is this? Generally Air Force mess is there, that Air Force mess will be providing services to its personnel. Okay, Air Force mess or similar mess will be providing services to its personnel, and this particular Air Force mess, when they are providing service to its personnel, is it covered anywhere in the list for our discussion? First, is it covered under exclusion from supply? No, it is not covered under exclusion from supply, and it is not covered under Department of Post, it is not covered under airport or port, it is not covered under Indian Railways, it is not covered under other services to business entities, because personal are not business entities, means it will be others, so therefore it will be exempted. So that is this. Accommodation services provided by Air Force mess or similar mess to its personnel or in relation to other than business entities, and it will be exempted. Then next point, supply of wheat flour after fortification to government for public distribution in fair price shops is taxable. Okay, so generally what will happen is that this wheat flour will be procured by the government and they will be distributing it in the ration shops. For the purpose of procurement of that wheat flour, what they will do, so they will be paying the money, and in that amount, so that is paid for both, that is wheat as well as fortification, that is conversion into powder. So but the value of goods, definitely the conversion into wheat into powder, the grinding is just a service element, which is small element only, because the major element is goods. The value of goods exceeds 25% of the total, so the exemption is not available. Supply of wheat flour after fortification to government for public distribution in fair price shops is taxable, as the value of goods exceeds 25% of total. Then next one, sanitation services provided to Indian Army is not with respect to Article 243W, and therefore it is not covered under exemption. So generally we provide any services, pure services to government is exempted, correct? Pure services to government is exempted. Now Indian Army is also government, so if at all any person providing sanitation services to Indian Army, that's the services provided to government, it's a pure service. Does it mean it is exempted? No, because first of all it should be an activity under Article 243 GRW. In relation to that, if they provide, then only it is exempted. Whether Indian Army is required to come under 243 GRW? No. So due to that reason, this exemption is not applicable. Sanitation services provided to Indian Army is not with respect to Article 243W, and therefore it is not covered under exemption. Okay, clear? Next, you can see here renting, including licensing, leasing, etc. following are exempted. So one second here. Next, say this, renting, look into this renting, including leasing, licensing, etc. following are exempted. So renting is divided into two, movable property and immovable property. Renting of movable property, we have 4 exemptions for that. Number 1, I have a motor vehicle which can carry more than 12 passengers. I am giving on rent to a state road transport undertaking, that renting is exempted. Number 2, hiring of a means of transport to GTA. So I have a vehicle that can carry goods I am giving it on rent to a GTA, goods transport agency. The money collected by them will be exempted. Hiring of electric vehicle that can carry more than 12 passengers. So this is a normal vehicle, but it is an electrical vehicle. Here also greater than 12 passengers, here also greater than 12 passengers. Here it is to a state road transport corporation, it is to a local authority. Then number 4, hiring of bus to a person, providing transportation service to education institution up to 12th standard or equivalent. Okay, so I have a bus that I am giving on rent to a person, that is that person is providing transportation service to education institution up to 12th standard. So the rent collected by me is exempted. That person providing transportation service is also exempted, and the school providing transportation service also exempted. School providing transportation service is exempted under service provided by education institution to its students, faculty and staff. And the person providing transportation service to school is also exempted under services provided to education institution, category 1 education institution, and I am giving my bus on rent to that person is also exempted. What if that person is providing transportation service to a college? Then I am giving the bus on rent to him. Is it exempted? No, it will be taxable. So these are the 4 exemptions we have in relation to movable property. All these 4 are related to motor vehicles. Then in relation to renting of immovable property, you look into building. So in that first point, I have a residential property. How do we know that it is a residential property? So it will be given as house or residential property like that clearly in the exam. But reality, residential property means at the time of construction we would have got the approval. So in that we will mention whether it is a residential property or commercial property. So it's a residential property. For what purpose we have given this residential property? For residential purpose. To whom? To an unregistered person, that is exempted. What if we are giving residential property on rent for residential purpose to a registered individual? So registered person is not covered under first point, exemption. So for registered person also, if they are registered individual and which is taken it for their family stay, then it is exempted. For example, I am a registered individual, I am taking a house on rent for my family stay, then the rent paid will be exempted even though I am a registered person. So 2 exemptions are there. Exemption number 1, residential property for residential purpose to an unregistered person, residential property for residential purpose to a registered individual for their family stay. Then third point, this newly added, that is accommodation services. Accommodation services for a continuous period of minimum 90 days. So there should be minimum of 90 days consecutive period, the accommodation should be given, and what should be the maximum rent where the value of supply does not exceed 20,000 rupees per person per month. So mostly these homestays or hostels or PG accommodations or working men's hostels like that. So all those people will be coming into this category, and even hotels also can be brought into this category. Simple. For how many days continuously they should be giving their accommodation, their premises? So it should be for a continuous period of 90 days. Whether they give residential accommodation like that, no. So it can be a commercial accommodation, that is commercial property, or a residential property. But accommodation, for accommodation it should be given for what period? Consecutive 90 days or more, minimum period of 90 days. And what should be the maximum amount per month? Less than or equals to 20,000 per month per person. Why they use the word per person? Because there will be sharing. In a hostel there could be 3 sharing or 4 sharing. So that room, if you see, total amount may be more than 20,000, but per person you need to see. For example, 4 people are there and each person is paying somewhere like 6,000 rupees per month. So 4 into 6, that is 24,000, means that room wise if you see, it is more than. So therefore here, accommodation service for a continuous period of minimum 90 days where the value of supply is less than or equals to 20,000 per person per month. Okay, so just 1 second. Fine, sorry. So there was some spam which was coming in the YouTube comments, that's why we turned off the comments. Coming back to this, immovable property. So building residential property for residential purpose to an unregistered person, residential property for residential purpose to a registered individual for family stay, and accommodation service for a continuous period of 90 days where the value of supply less than or equals to 20,000 per person per month. Okay, that is about this building exemption. Then for land also we have some exemption. You can see here these 2 exemptions are there. First exemption for land, is with respect to, government, okay, giving land on lease to government authority or government entity. Government giving on land on lease to government authority or government entity, and what type of lease they did not specify. So it can be long term lease or short term lease, etc. So, and both upfront charges as well as annual lease rentals, okay, will be exempted, not only just upfront charges. Then they have not given what type of land, let it be agricultural land or industrial land, whatever the land may be. Whereas in the second point, if you see, upfront charges including preferential location charges with respect to long term lease. What is a long term lease? Lease for greater than or equals to 30 years. If you see this exemption, first exemption, any type of land, but here only industrial plots or plots for development of infrastructure for finance business, and here the supplier should be government. Here the supplier should be SIDCO, State Government Industrial Development Corporation, and here recipient can be any person. And what is exempted? Only upfront charges is exempted. So we need to understand these differences. So exemption number 1, exemption number 2 for the land. And first exemption, who is the supplier? Who is the supplier for the first exemption? Government. Second exemption, SIDCO, State Government Industrial Development Corporation. Then next point, recipient. For the first exemption, who is the recipient? Government authority or government entity. Whereas in the next place, any industrial unit, any person. And next, third point, what is the type of land? In case of first exemption, any land. But in the second exemption, it will be, so plots, industrial plots or plots for development of infra for finance business. Then fourth point, so what is the type of lease? First exemption, either long term lease or short term lease. Whereas in the second exemption, it should be a long term lease greater than or equals to 30 years. And then what is exempted? In the first exemption, both upfront charges as well as annual royalty. But here only upfront charges, including preferential location charges. Preferential location charges means in order to get a land at a particular area, okay, for that we will be paying some charges, that is known as preferential location charges, like near to a highway or near to an airport, etc. That is preferential location charges. So upfront charges including preferential location charges. Then next you can see renting of the precincts of religious place meant for general public. There is a religious place, that religious place is meant for general public, and that place is given on rent, okay, so for the purpose of either accommodation or hall or shops, and moreover it should be registered as a trust. If it is for accommodation less than 1000 rupees per day, it will be exempted. So that is 999. You remember it like 999, okay. So you don't remember it as less than 1000, because 1000 means you will get confused. Remember 999 per day, it will be exempted. For hall it will be 9999 per day, it will be exempted. For shops it will be 9999 per month, then it will be exempted. Beyond that it will be taxable, or equal to 1000 or equal to 10,000, that will be taxable. Got it? So that is about this renting of precincts of a religious place meant for general public. Next, look into sports related services. In this sports related services, we have first point, that is there is a recognized sports body which is collecting sponsorship money from any person, it will be exempted. So sponsorship services provided by a recognized sports body. What is a recognized sports body? You can see here National Sports Federation, Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services Cultural and Sports Board, and Panchayat Sports Board. These are the 6 recognized sports bodies. If they collect any sponsorship money, that sponsorship money collected by them will be exempted. That sponsorship money can be collected from any body corporate, or it can be from an individual, but that sponsorship service will be exempted. Class konju governing sir, please. Exam. This is revision batch, please. So therefore these are the 6 recognized sports bodies: National Sports Federation, Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services Cultural and Sports Board, and Panchayat Sports Board. These are the recognized sports bodies. If they collect any sponsorship money, that sponsorship money will be exempted. It can be by body corporate or firm, or it can be by a sole proprietor. But apart from this, any other person providing sponsorship services will be taxable. So IPL will not come under recognized sports body. So therefore the sponsorship money collected by them will be taxable. Suppose if it is collected from body corporate or firm, it will come under RCM. If it is from other than body corporate or firm, it will be FCM. But what we need to remember is only exemption, that is sponsorship services provided by recognized sports body is exempted. Then second point, services provided by individual as a player, referee, umpire, coach or team manager, to whom they are providing services to a recognized sports body, then whatever money that is collected will be exempted. Okay. What about others like commentators, pitch curators, selectors, etc.? That will be taxable. Then third point you need to remember, services provided by one recognized sports body to another recognized sports body. For example, if Indian Olympic Association receiving services from National Sports Federation, or Indian University Sports Board receiving services from National Sports Federation, between them if there is any services, that is exempted. These are the three exemptions with respect to services provided, sports related services. Suppose if Virat Kohli getting money for playing for IPL franchise, whether the money will be taxable or exempted? Taxable. Suppose if he is getting money for BCCA matches, that will be exempted. Okay, because player, referee, umpire, coach and team manager. Then look into the next area, services by unincorporated association to its members. There is an unincorporated body or unincorporated association which will be providing services to its members, and that particular unincorporated association, if it is a trade union, industrial labor union or agricultural labor union, then it will be exempted. Okay, so trade union means association of traders, industrial labor union means all industrial labor, they will form a association, that then agricultural labor union, so they will be collecting some membership fees, that will be exempted. Then suppose if the service itself is exempted, for example healthcare service is exempted, there is an association which is providing the healthcare services to the flat members. Anyhow healthcare service is exempted, even if it is provided by association to its members, it is also exempted. Then membership fees or maintenance charges collected by a resident welfare association, if it is up to 7,500 per month per member, then it will be exempted. What if it crosses 7,500 per month per member? Entirely taxable. And this is applicable only for resident welfare association, means apartment owners association, not for commercial complexes. For commercial complexes, whatever may be the maintenance charges, it will be taxable. Then apart from this, any other association, so includes commercial association also, commercial complex also it will come. Any other association can be commercial complex also, or any body, club, etc. So what should be the charges per annum? Per annum it should be less than or equals to 1000, then only it is exempted. If it exceeds 1000 rupees per annum, then entirely it will be taxable. Now in this regard you can see electricity supplied by malls or airport operators or real estate owners or real estate developers or resident welfare association. So basically what happens there, it's they will be paying the electricity charges where the bill is in the name of the members. For example, there is a resident welfare association and the bill is in the name of a flat owner, but the association has paid the electricity bill and recovered from the flat owner. Will it be included in the value? First of all, in maintenance charges calculation, it will not be included. Why it will not be included? Because this is coming under expenditure incurred as a pure agent. It is a liability of the recipient which is incurred by the supplier. So it will not be included in the value for payment of GST. So while counting that 7,500 maintenance charges, don't include these electricity charges. So pure agent, it shall not form part of value. Second point, suppose if it is common area electricity charges, that common area electricity charges bill is in the name of association. Association will make the payment and in turn it will be recovered from the members. On what basis they are recovering? Actual basis or ad hoc basis? It is being recovered on a actual basis. Actual basis means 2 months once the electricity bill will come. How much ever is the electricity bill? Say for example 4,000 rupees means 4,000 divided by how many flats are there? Say 10 flats are there. From each flat they are collecting only 400 rupees. Then on actual basis, then also that 400 don't include in the maintenance charges because they are deemed to be pure agent even though bill is in the name of the association. Generally when bill is in the name of the association, they are not pure agent. But in the circular they are telling even though bill is in the name of the association, they are deemed to be pure agent. So therefore it will not be included in the value. Is that clear? The next one. Suppose if they are collecting on ad hoc basis, 2 months once the bill will come, but what they are doing is that monthly 500 rupees they are collecting. along with the maintenance charges. Thereafter, whenever the bill will come, so they will be paying out of this, some excess amount may be there, some shortfall may be there, etc. and all. Then in that case, what we need to do, whatever ad hoc amount that is being collected will form part of maintenance charges, and if that maintenance charges exceed 7,500 per month, then it will be entirely taxable. So it shall form part of value entirely. Okay, so collects charges from members on ad hoc basis. So here you underline ad hoc basis, ad hoc basis. Here you underline actual basis, which sometimes exceeds the actual electricity charges of electricity board. Then suppose if Resident Welfare Association collects an amount exceeding 7,500 per month per member, then entire amount is taxable, even though there are some contrary judgments in this regard. Then look into the next area, transportation of passengers. In case of transportation of passengers, following are exempted. Railways, in case of railways, other than first class or AC, so everything is exempted. So sleeper class is exempted, general ticket will be exempted, and second class sitting etc. will be exempted. Only first class is taxable, and any AC is taxable. Any AC can be first class, second class, 3-tier etc. everything, and will be taxable. Other than this is only exempted. Then metro, mono and tramway is exempted. Of course, that is AC only, but metro, monorail and tramway always exempted. This already we saw in the context of Indian Railways, that is platform tickets, and then clock room charges, waiting room charges, or battery operated car services. Then when it comes to airways, for airways, if the starting point or ending point of the passenger is in northeastern states or Bagdogra in West Bengal, then it will be exempted. What are those northeastern states? Already we discussed yesterday, that is MMTN, ASAM. And next, consideration for viability gap funding. So there are some regional connectivity airport scheme wherein, so these airports, like in those airports, if any airline is operating, they will receive some consideration from the government. That amount received from the government is exempted for a period of 3 years. That is known as consideration as viability gap funding. So 2 exemptions, you remember, this is anyhow remember under government services. 2 exemptions you need to remember for railways, other than first class are AC, metro, mono, tramway. Airways also 2 exemptions, starting point, ending point in economy class in northeastern states or Bagdogra and West Bengal. Consideration as viability gap funding for a period of 3 years. Then when it comes to waterways, in waterways we have 2 exemptions again. Inland waterways, inland waterways means rivers or backwaters etc. that will be exempted, whereas coastal waters means the moment we say coastal, we are touching sea waters between places in India, but for what purpose? Other than tourism purpose, means for public transportation. Coastal waters within India for other than tourism purpose, and whether that is operated by government or private, means whether the ship is a cruise ship which is operated by a private cruise ship or it is a government cruise ship. If they are engaged in transportation of the passengers, say for example from Chennai to Andaman, so there is a cruise ship which is transporting the passengers not for tourism purpose, that is like a public transportation, so it will be exempted. Then when it comes to roadways, we have 3 exemptions. Non-AC stage carriage. Non-AC stage carriage means stage carriage basically is which stops at every stage of its journey. So this share autos will come under stage carriage, local bus also will come under stage carriage. So non-AC stage carriage will be exempted. And what if it is a AC stage carriage? Taxable. Contract carriage means point to point travel. It starts at a particular point, it ends at another point. That's called as point to point travel. Non-AC contract carriage is also exempted provided it is other than hire or tourism. Suppose if there is a non-AC bus which is offering a package tour, and whether it will be taxable? Yes, it will be taxable. Some non-AC contract carriage which we take on rent for marriage and all, so like a government bus, not like CTC bus or some other government bus, non-AC bus, will take it on rent for marriage functions, whether that will also be taxable? Yes, other than for hire or tourism is only exempted. Then what if it is a AC contract carriage? Always taxable. Then metered cab or auto rickshaw. Now wherever we see in case of roadways as exemption, what are the 3 exemption? Non-AC contract carriage, non-AC contract carriage other than tourism or hire, non-AC stage carriage, and metered cab or auto rickshaw. If it is through e-commerce operator, generally auto will be exempted. If it is a Ola auto, Uber auto, then it will become taxable. Exemption not available if service is provided through e-commerce operator. Then you can see transportation of passengers other than above is taxable. That is ropeway, cable car, horse cart, rickshaw, chartered flights, helicopter, all these are taxable. But only thing, if they are crossing the threshold limit of 20 lakhs, they will register and they will pay GST, otherwise they will not pay GST. Then renting of motor vehicle is different from transportation of passengers. Basically, in case of renting a motor vehicle for a period of time, the vehicle will be at the disposal of the recipient. In case of renting a motor vehicle, the vehicle is at the disposal of the recipient for a period of time, which is absent in case of transportation of passengers. In case of transportation of passengers, just they will pick and drop and leave. So that will be coming under transportation of passengers. So because in case of renting, you need to refer to the renting chart. In case of transportation only, we need to refer to this chart. Then next, transportation of goods. In case of transportation of goods, for railways, only specified goods. So railways, specified goods, even waterways, coastal waters also specified goods, and in case of GT also we have specified goods. This specified goods points comes in three places. One in railways, another coastal waters between places in India, then GTA. What are those specified goods? Total 6 specified goods. Agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural and man-made disasters, and defense and military equipment. These are the 6 goods. If transported by railways, if transported by waterways, coastal waters within India or GTA. Okay. Then when it comes to airways, for railways other than this we don't have any exemption. For airways only one exemption, that is transportation of goods from where to where? Outside India to India, that is exempted. India to outside India is not exempted. When it comes to waterways, inland waters is exempted. So that is inland waters means national waterways. So that is goods also exempted, passengers also, inland waters is exempted. Coastal waters within India only specified goods. Then roadways. In case of roadways, other than GT courier agency, everything else is exempted. So normal lorries which are transporting the goods will be coming under exemption. Only if it is a goods transport agency or a courier agency, it is taxable. And what is a goods transport agency? Goods transport agency is basically a person engaged in transportation of goods by road. You can see below, GTA is a person engaged in transportation of goods by road and issues a consignment note by whatever name called. What if they are not issuing consignment note? Because this point already tested in November 24 exam in MCQs also. That is, what if they are not issuing consignment note? They are not a GTA. When they are not a GTA, other than GTR courier agency, normal transportation will be exempted. So see this, if they are not issuing consignment note, they are not GTA, and consequently transportation of goods by roadways will be exempted. Are you understanding this? So what will be there in consignment note? In consignment note there will be details related to, like consignor, consignee, etc. Consignment note issued by transporter contain details of consignor, consignee, goods transported, vehicle details, then what is the place of origin, place of destination, etc. and all will be there. Then next, transportation of goods by waterways. Waterways from India to outside India or outside India to India, we don't have any exemption. Everything will be taxable. Previously we had, now everything will be taxable. Then next, GTA services. For goods transport agency services, already we have one exemption, that is specified goods. Apart from the 2 more exemption you need to remember. That is, if the recipient is central government, state government, union territory or local authority, and they are registered only for the purpose of deducting TDS under section 51, that is GST. Then third point, if the recipient is individual, HUF, AJP or trust. Individual, HUF, AJP or trust, all are unregistered and not having factory. So these are the 3 cases GTA service exempted, remaining case it will be taxable. Wherever GTA service is taxable, remember GTA is having 2 options. Option 1, they can pay GST under FCM. Under FCM itself they have again 2 rates, that is 12% with ITC, 5% without ITC. Means they cannot take ITC on their inward supplies if it is 5%, they can take ITC on their inward supplies if it is 12%. Whereas GTA has another option, that is RCM, where the recipient will pay. But when they need to exercise this option for every financial year, and by when they need to exercise this option in the previous year last quarter. So between January 1st to March 31st of the previous year, you can see that GTA has option to choose either FCM, that is GST at the rate of 12 or 5%. So but wherever it is 5%, it is without ITC, or RCM. RCM will be 5% during a financial year. However, such option should be selected between which date to which date? 1st January to 31st March of the previous year, and option 1 selected remains till the subsequent selection is made. And if they are not issuing a consignment note, they are not called as ET. Already I told you this point. Then there is one CBSE circular related to transportation. See this, that is, there is a owner of a vehicle who is giving vehicle, non-AC vehicle to a person, and how it is given. So if it is operated in a predetermined route on a predetermined schedule, means what will happen, they will be picking up the passengers at particular routes and particular points, and they will be again dropping back the passengers in some places. Then it will be coming under operated on a predetermined route on a predetermined schedule. So in that case, it is not called as contract carriage for hire, it is other than hire, therefore it will be exempted. What if it is a AC vehicle? Definitely it will be taxable. If it is non-AC only, so operated in a predetermined route on a predetermined schedule, contract carriage other than tourism or hire, and it will be exempted. What if the vehicle is at the disposal of the recipient, means the vehicle is with the recipient? Is it for a particular trip or voyage or for a particular period of time? If it is for a particular trip, for example, a company is taking employees on a vacation, so to Ooty or Goa, etc. For the trip only, the vehicle will be at the disposal of the company. Then in this case, it will come under contract carriage for hire, not renting, contract carriage for hire or tourism. Therefore, it will be taxable. Whereas, if it is for a period of time, then it will be called as renting of motor vehicle, and renting of motor vehicle also taxable. But what is the difference? If it is contract carriage, always FCM. If it is renting, it will come under RCM. Three conditions are there for RCM. What are they? Supplier should be other than body corporate, recipient should be body corporate, and the rate of GST should be 5%. Then it is RCM, otherwise it will be FCM. Then look into two more circulars. Point number 1. Stage carriage means what? Stage carriage means a vehicle which transports passengers where they can board at any stage during the journey. On the other hand, contract carriage is a point-to-point journey. And there is one circular, transportation of minerals within the mining area. So within the mining area, so there will be one vehicle which will be transporting the minerals and deployed with a driver for a specific duration. Specific duration means period of time. Is it transportation of goods service or renting of motor vehicle? Definitely renting of motor vehicle, because a vehicle is at the disposal for a specific duration. So therefore it will come under renting of motor vehicle but not transportation of goods. Then you can see import of services. In case of import of services is divided into two, OIDR services and other than OIDR services. OIDR services will always be taxable. If it is imported by non-taxable online recipient, then it will be covered under FCM. If it is other than non-taxable online recipient, then it will be RCM. If it is other than OIDR services imported by non-taxable recipient, then it will be exempted. By other than non-taxable recipient, then it will be taxable. But here we have an amendment. But before that, what is OIDR service? Any service which is mediated over internet is known as OIDR service. It's an online service. In the absence of internet, it cannot be provided. That is called as a OIDR services. So online classes will come under OIDR services. OTT platforms will come under OIDR services. They gave a definition. Online information database access retrieval service means service whose delivery is mediated by information technology over internet. Or electronic network, and the nature of which renders their supply impossible to ensure in the absence of information technology. Then it will be called as OIDR services. And what are they? Advertising on internet, example Instagram and YouTube, providing cloud services, QuickBook, and providing e-books, movie, example Kindle, Spotify, providing data or information retrievable or otherwise, Udemy, Canva, online supplies like digital content, so Amazon Prime, Netflix. Then digital data storage, cloud storage, that is Google Drive, then OneDrive, iCloud. Online gaming, not online money gaming, because online money gaming will come under specified actionable claims. Online gaming will come under OIDR service, means you spend money to play the game, like GTA or Minecraft. These are all examples of online gaming. So this is about OIDR services. And so like suppose for example some meetings we will attend online. Just because we attend online, will it become OIDR services? No. For example, there is one advocate who will be consulting in online. So can we call it as OIDR service? No, not like that. So it is like which is impossible to ensure in the absence of internet is only OIDR services. And OIDR service always taxable. Import of OIDR service, who will pay? If it is imported by NTOR, then it will be payable under FCM. Who is a non-taxable online recipient? Any unregistered person receiving online information database access retrieval services. Where is that person located? Located in the taxable territory, okay, including a registered person. So who is a non-taxable online recipient? Unregistered person, or a registered person who is registered only for deducting TDS. So they can be individual, they can be firm, they can be company, any person. For any purpose they might be importing, but they are unregistered. If they are registered only for deducting TDS. Then they are NTOR. Who will pay GST? Supplier only will pay GST. If it is other than NTOR, then it will be RCM. And NTR also we have. So if it is, what is the difference between NTOR and NTR? O is the difference. So only when OIDR comes, we need to use NTOR. In other place, we need to use NTR. Who is non-taxable recipient? Generally individuals, trust home, individuals, trust government. So therefore individual, trust, government will come under non-taxable recipient. Individual, trust, government. So who is an, like, what kind of individual? Unregistered individual. And who is importing for what purpose? Personal purpose. Trust. Trust is a charitable trust, either registered or unregistered under GST, but importing for what purpose? Charitable activities. Then government, whether registered or unregistered, importing for what purpose? Other than business or commerce. Then it will be exempted, that is non-taxable recipient. By other than non-taxable recipient, so there they have brought in one exemption, that is there is a Indian establishment of a foreign airline company. There is a Indian establishment of a foreign airline company, say Singapore Airlines. Singapore Airlines is having a Indian establishment. That Indian establishment is importing services from their head office without consideration. That is important. They are importing services from their head office without consideration. So Singapore Airlines is having a branch in India, is importing services from their head office without consideration, and even though it is supply under 7(1)(c), because import of service from a related person or other establishment located outside India, even though it is supply under 7(1)(c), but it will be exempted, provided Ministry of Civil Aviation certifies that there is a foreign establishment of a Indian airline company. Say our Indigo Airlines is having an establishment in Singapore, and the Singapore government has given the reciprocal exemption to them. So then only here it is exempted. Okay. So provided Ministry of Civil Aviation certifies that there is a reciprocal agreement between India and the foreign country, and very important, it should be without consideration. So this is a newly added amendment, then it is exempted. In other cases, it will be taxable under RCM. Okay. Then next one. So you can see here NT or NTR, all those things, and whenever GST is payable under RCM, are they compulsorily required to get registered? Yes. Every person who is liable to pay GST under RCM is compulsorily required to get registered, irrespective of the threshold limit. And also the supplier. Supplier means OIDR services, the supplier will register, like will pay na. That supplier is also compulsorily required to get registered irrespective of the threshold limit. You can see the next 2 points. Is there a remote? So these 2 points are related to the compulsory registration. The IGST paid is available as credit to the recipient if such recipient is engaged in making any taxable supplies. So this is about import of service. You understood now? Then there are 2 points related to this. Concentrate. Let me give you the background of these two. First one is about, there is a bank. There is a bank which is earning interest on loans, advances, deposits. It is exempted, correct? And if there is not a bank, there are any other person also earning interest on loans, advances, deposits is exempted? Yes. For example, you are my related company and I am your holding company, you are my subsidiary company, and I am giving you a loan for which you are giving me interest. Is this interest taxable or exempted? Exempted, because any person earning interest on loans, advances, deposits will be exempted. Now, for a change, I am outside India, I am your holding company outside India, you are my subsidiary company in India. So now in that case, I will be giving you loan, you will be paying me interest. Whether this interest is taxable or exempted, now the character of the service will not become banking, it will become import of services. When it become import of services, is it OIDR other than OIDR? Other than OIDR. Imported by non-taxable recipient or other than non-taxable recipient? Other than non-taxable recipient. It is not Indian establishment of foreign airline, so therefore it will be taxable under RCM. But literally the same transaction, if it is in India, it is getting exempted. If it is because import of service, it changes, for which many companies have requested the finance minister. Accordingly, this clarification they have brought in. That is, if there is an Indian subsidiary company which is taking loan from a foreign holding company, if they pay only interest as a consideration, the activity is not a supply, So whether loan taken by Indian affiliate from overseas affiliate, where both being related, constitute supply. If the consideration is only interest or discount, it is not a supply. As it is not a supply, the value under Rule 28 will not be applicable. What if the consideration is processing fees, administrative charges in addition to interest or discount? Then in that case, it will become supply under 7(1)(b). Why not 7(1)(c)? Even though it is related, but they pay the consideration. That's why it is 7(1)(b). Supply of service where such processing fee and administrative charges is treated as consideration, and value will be determined under Rule 28, and GST payable under RCM, treating it as import of services. Understood? Next one, you can see whether GST is applicable on ESOP, ESPP, RSU provided by a company to its employees through its overseas holding company. What is this? Generally, there is a subsidiary company, same holding company outside India, subsidiary company in India, and the subsidiary company wanted to retain the employees. For retaining the employees, they need to offer some ESOPs, employee stock option plan, or employee stock unit scheme, or some restricted stock unit, some kind of stock options they need to give. So that because of the stock options, the employee feel that they are getting the equity in the company, so they will be staying. It's like 5 years you work, and thereafter you can redeem the stock options, and you can become the equity shareholder like that. So now what happens? Subsidiary company asks the holding company to allot the ESOPs to the employees of the subsidiary company, for which holding company will allot. And when the holding company is allotting, the subsidiary company need to make some payment for that ESOP. So usually ESOPs will be allotted at a rate which is less than the market price, but that amount I need to pay, no. So that amount I have paid. That is, I am a subsidiary company, there is a holding company, I made the payment. But literally, if you see, even though it's a related party transaction, first of all, what is the underlying there? Shares. So as it is underlying shares, therefore it is not a supply. If I pay only the cost towards the ESOPs, what if I pay some administrative charges, etc. and all, that will become import of services. Is it clear? So same logic. In case of cost to cost reimbursement by the domestic subsidiary to its foreign holding company, it is not treated as supply, because it is a transaction in securities, okay, and there is no GST liability. In case of additional charges collected by foreign holding company, additional amount is treated as supply of service, and GST payable under RCM by the domestic subsidiary. Is it clear? So that is about this import of services. And you can see here the next area, construction services. Construction services, first point, construction of an individual house. That individual house, irrespective of the floor area or cost. But what is an individual house? House belonging to a single family is known as individual house. That will be exempted. And mostly it should be a pure labor contract, and it should not be a works contract. Whereas second point, construction, repair, alteration, renovation of following projects. What project? Housing for all mission or Pradhan Mantri Awas Yojana. For that, whatever money that is received will be exempted. Again, it should be pure labor contract and not a works contract. What is the difference between first point and second point? In first point, it is an individual house, it is a project. And the first point, it is construction. But in second point, either construction or repairs. And then third point, 1/3 of the gross value of flat is exempted towards land or undivided share of land. So whenever you buy the flat, along with the land also you need to pay because of the undivided share of land. But land is excluded from supplying. For that reason, from the gross value of the flat, 1/3 will be reduced. So you can see here. So 1/3 of the gross value of flat. For example, if you take 75 lakhs, 75 lakhs into 1/3 is what? 25 lakhs. So 25 lakhs will be excluded and remaining, that is exempted. So remaining 50 lakhs only will be taxable. What if the land value is given separately? Even if the land value is given separately, we will follow the same thing. That is, we will take land value 40 lakhs, construction cost 50 lakhs, 40 plus 50, 90. In that 90, 1/3, that is 30. 30 is only exempted. Remaining 60 lakhs will be taxable. So 1/3 is only exempted towards land or undivided share of land where the gross value includes value of land. Then next we have TDR, FSI and long-term lease. TDR refers to transferable development rights, FSI is floor space index, and long-term lease of land. So this is given by the landowner to the promoter or builder. So landowner is giving TDR, FSI, long-term lease to the promoter or builder. On this, the promoter or builder will pay GST under RCM. However, the promoter or builder, while paying GST under RCM, there is an exemption for their inward supply. What is that exemption? Proportionate to the residential units booked before completion certificate divided by total carpet area, they will get the exemption. So what is the exemption formula? First we need to see the value of inward supply into 18% into, see the carpet area of residential units booked before completion certificate divided by total carpet area of the project, that proportionate is exempted. Example, value of inward supply of TDR and FSI for a promoter or builder is 10 lakhs excluding GST at 18%. GST payable on inward supply is 1,80,000. Floor area of residential flats booked before completion certificate is 28,000 square feet. Total floor area of the project is 50,000 square feet. So 28,000 divided by 50,000, to that extent it will be exempted. So 1,80,000 into 28,000 divided by 50,000. So 1,800,000 will be exempted. So remaining will be taxable. So 1,80,000 minus 1,800,000, 79,200 will be taxable. Is it clear or not? That is the GST payable. So transferable development rights, floor space index or long-term lease, provided the land is used for construction of residential flats. So what is the exemption? Value of inward supply into 18% into floor area of residential flats booked before completion certificate divided by total floor area. Then there is one amendment related to taxability of preferential location charges. Preferential location charges are some extra amount which will be collected by the builder in case they are allotting the flats which is like east facing flats or somewhere like north facing flats or flats in the first floor or beach view facing flats, like that they will be collecting some extra charges. These preferential location charges, whether it is collected at the time of sale of flat, yes, then in that case whatever is the rate applicable to the flat, that will be applicable for preferential location charges also. If it is paid along with the consideration for construction service, treated as construction service by applying composite supply and taxable based on construction service. If entire consideration is received after obtaining completion certificate, anyhow that is excluded from supply. So this preferential location charge is also not a supply. Other cases GST will be payable. At what rate? At the rate applicable to the construction. Suppose if it is paid separately, independent of the construction service, then it will be treated as a individual supply and taxable at 18%. Taxable separately as supply of service, where the GST rate is 18%. So then we have advocate and arbitrator services. So I have just made it simple. Advocate or arbitrator services. So 3 points are common for all the people. That is normal advocate or firm of advocate, senior advocate or arbitrator. So advocate is providing services to a person other than business entity. It will be exempted in all the 3 cases. Okay. If the service is provided to government or government authority or government entity, then also it will be exempted. Suppose if they are providing service to a business entity whose turnover during the previous year does not exceed threshold limit, in all these 3 cases it is exempted. That is normal advocate, individual advocate or senior advocate or to an arbitrator. But in the last point only there is a difference. If there is a person who is providing services to another advocate or firm of advocate, that is normal advocate or firm of advocate providing service to another advocate or firm of advocate, it will be exempted. But arbitrator will never provide service to advocate or firm of advocate because they both are not practicing in the same field. So due to that reason it is not applicable, that is hypothetical. What if senior advocate is providing service to another advocate or firm of advocate? Then in that case the recipient will not be another firm of advocate or advocate, but in turn there will be one litigant, applicant or petitioner, ultimate. That ultimate litigant, petitioner or applicant is deemed to be recipient, and if they are individual, then it is exempted. If they are government, then it is exempted. If they are business entity whose turnover during previous year does not exceed threshold limit, then it is exempted. Like that we need to interpret. Otherwise it will be taxable and they only will pay GST under RCM. Remember, advocates will never pay GST. Their outward supplies will be either exempted or covered under RCM. Always advocate and arbitrator service falls under RCM if taxable. Service provided by senior advocate to individual advocate or firm advocate is not exempted. In such case, the ultimate litigant, applicant or petitioner shall be deemed to be recipient. An advocate, either individual or firm, and the arbitrator are not required to get registered. Why they are not required to get registered? As they are exclusively engaged in supplies under RCM. Section 23 overrides Section 24. Then we have exemptions under IGST Act. So in this, we see the first point. If both supplier of service and recipient of service is located outside India, then there won't be any GST. First of all, place of supply cannot be determined when both supplier and recipient are outside India. So they have exempted all the services. Supplier of service outside India, recipient of service also outside India. Then number 2, services provided by an Indian tour operator. To whom they are providing services? To a foreign tourist. And where the tour is conducted? Completely outside India, then it is exempted. Example, Indian tour operator providing tour operator service to a US citizen in relation to the tour in Sri Lanka. So completely it is exempted. What if the tour is partly in India, partly outside India? Then proportionately it is exempted. To what proportionate? A, total consideration into number of days the tour is conducted outside India divided by total number of days, or total consideration into 50%, whichever is lower is exempted and remaining will be taxable. While computing the number of days the tour is conducted outside India, so you divide the day into half, 12 hours. If it is 12 hours or more, you need to take it as 1 day. If it is less than 12 hours, you need to take it as half a day. Then next, fourth point, services provided by an intermediary, where the seller of goods outside India, that is I am a commission agent or I am a broker, I am connecting a seller outside India and a buyer outside India. For connecting these two people, I get a commission. That commission will be exempted. Won't it become export of service? Again, no. Because intermediary service, the place of supply will be location of supplier and it will not become export of services. Service provided by intermediary where location of supplier of goods and recipient of goods is outside India. And next one, we have miscellaneous exempted services. Point number 1, transfer of a going concern, like business full lock stock barrel I am selling, entire business I am selling, like a slum sale in income tax, fully it is exempted. Transfer of a going concern as a whole or independent part thereof. Supply of service associated with transit cargo to Nepal and Bhutan. Nepal and Bhutan are landlocked countries. The goods are unloaded in India and thereafter it is going to Nepal and Bhutan. That is known as transit cargo. For the transit cargo, e-way bill not required. And if you provide any services like loading, unloading, transportation, everything will be exempted. Then even return journey also, if it is returning empty, for that we collect some charges, it will be exempted. What if it is returning by carrying some goods? For that freight collected will be taxable. If the return journey is empty, so then onward journey itself we will collect the money for return journey also, that is exempted. Both to and from covered in the exemption as per CBSE circular if the cargo container returns empty. Service by way of collecting or providing news by independent journalists, Press Trust of India or United News of India. So there will be some independent journalists who are like freelancer journalists collecting money from news agencies which will be exempted. PTI and UNI are news dissemination agencies, so we will give news to them and they will distribute it to all others. So whatever money that they are collecting is also exempted. Then services by public libraries. There will be some public libraries which is open for all. They will be lending books and for which they collect some lending charges, that is exempted. What if it is a private library? Then it is taxable, but it should not be an education institution, because for example ICI is a private library, but that will come under exemption with respect to services provided by an education institution to students, faculty and staff. Then service by an organizer. There is an organizer who is conducting a business exhibition where the exhibition is held outside India. Even though organizer is in India, the recipient is also in India, but as the exhibition is held outside India, it will indirectly encourage exports. That's why it is exempted. Then services by way of public conveniences, that is washroom, lavatories, toilets, etc. They collect 1 rupee, 2 rupee, 5 rupee for the purpose of giving access, that is exempted. Service by way of access to road or bridge on payment of toll charges, that is a builder will lay down the road and on the vehicles which is plying on the road they will be collecting toll charges, that is exempted. What if there are some higher toll charges for not having a fast track, that is also exempted. What if there is some overloading charges because of huge vehicles, commercial vehicles, they need to pay overloading charges, that is also exempted. What if the charges are payable by government towards annuity? Annuities means like they will not pay toll charges, yearly they will pay some amount for constructing the road, that charges will be taxable other than payment by way of annuity. Then services by a performance artist. Who is a performance artist? One who performs before the audience is known as a performance artist, and they should be performing in either classical or folk, and in what art form, either music, dance or theatre. How much consideration they should be collecting per annum or per performance, not per annum and all, per performance. How much? 1,50,000. If it does not exceed 1,50,000, then it is exempted. What if it exceeds 1,50,000? Entirely taxable. What if they are promoting a brand, means they are acting as a brand ambassador and earning some money, then it will be taxable. Services by a performance artist in folk or classical art form of music, dance or theatre, where the amount charged is up to 1,50,000 for a performance, excluding services provided by such artist as a brand ambassador. Then services by way of training or coaching in recreational activities relating to arts or culture by an individual. So there are some training in arts or training in culture, but that should be by an individual. What if there is a dance school which is operated by a partnership firm? That will be taxable. If the same dance school is operated by an individual, then it is exempted. What about sports? Sports should be by a charitable trust, then only it is exempted. Then point number 10, satellite launch services by any person. Previously it was given to ISRO and other entities, now to any person. Then 11, transmission and distribution of electricity. Electricity is exempted. On electricity charges there is no GST. Then what about other services in relation to electricity, like meter rent and thereafter shifting of meters from one location to another location, or increasing the load capacity charges, or testing of the meters, like that. There are many services provided by electricity department. Whether all those are also exempted? Now exempted. Previously there was no clarity related to this. Now they have brought in the exemption. Services by way of providing metering equipment on rent, testing of meters, releasing of electricity connections, and shifting of meters or service lines which are incidental or ancillary. See, all these are just the illustrative list, not that only this. All incidental and ancillary to transmission and distribution of electricity provided by electricity transmission and distribution utilities to their consumers is exempted. Got it? So transmission and distribution of electricity also exempted. These incidental and ancillary service is also exempted. Then in section 35 of Income Tax Act, there is a scientific research expenditure which is allowed as a deduction 100%. Either that entity can do the scientific research, or they can contribute it to an association or a university which is engaged in scientific research. Now that university or association which is engaged in scientific research is giving you grant for doing scientific research. You are one person who is doing scientific research. That association or university is giving you grant. Whether that grant is taxable or exempted? Exempted. Previously this point was not there. Research and development services against consideration in the form of grants. From whom? From a government entity or research association, university or college, or any other institution notified under section 35 of Income Tax Act 1961. So with this we completed exemptions. Okay, so we took around 2 hours 15 minutes time and we completed it. Now what you need to do is that this particular video you need to watch as many number of times as you can whenever you are free. So maybe you can watch in 1.5x speed. Already I took in that speed only, but you can watch even in 1.5x speed, it's okay, and thereby many times you need to revise. So this exemptions chapter you don't by heart, you listen to it as many number of times as you can, so you know what are exempted. You go to the exam, you see the transaction, immediately that will strike in your mind that it is exempted. If nothing is known, then it will be taxable, because when you read the question, if it appears to be new, which means we have not discussed it, means it will be taxable. All others will be exempted. Got it? Thank you. We'll take a break and we'll meet after 15 minutes and we will see some illustrations related to this and then move to the other topic, that is charge, RCM. Okay, we'll start. So there is one query, sir, in education institution can category 2 be taken as colleges? Yes, category 2 is colleges only. And you please take solved workbook. In solved workbook we have got some questions related to exemptions. You can see that questions on amendments. Look into question number 1. Question number 1, page 647. ABC Private Limited, an Indian entity, secured a loan of 1 crore from its overseas affiliate XYZ Incorporation based in the United States. The loan was provided at an interest rate of 6% per annum for a tenure of 3 years, with interest being the only consideration charged. Whether the interest on loan paid to XYZ Incorporation is treated as supply and chargeable to GST. So just now we discussed that whenever there is a holding company and a subsidiary company, holding company outside India and the subsidiary company is in India, if they pay only interest, then it is not a supply. Import of service by way of loans or advances against consideration in the form of interest or discount is not treated as supply. Accordingly, ABC Private Limited securing loan from XYZ Incorporation against interest of 6% per annum is not a supply and consequently it is not chargeable to GST. However, if the Indian affiliate pays consideration, then it will be. So see the next part. What will be your answer if, okay, what will be your answer if in addition to the interest, XYZ Incorporation also charged a processing fee of 1,50,000 for facilitating the loan? Then that 1,50,000 will become supply under 7(1)(b) and it's an import of service other than OIDR services imported by non-taxable recipient or other than non-taxable recipient. Other than non-taxable recipient. Why? Who will come under non-taxable recipient? Individual, trust, government. So here it is not individual, trust or government, it will be others. So therefore it will be covered under RCM. Okay. So therefore say this, chargeable to GST under RCM. In the present case, ABC Private Limited shall pay GST on rupees 1,50,000 paid to XYZ Incorporation as processing fees. Then look into another question, question number 3. This is also on that circular related to ESOPs. Unilever PLC, a foreign holding company, offers an employee stock option to the employees of its Indian subsidiary Hindustan Unilever Limited as a part of their compensation package. Under this plan, Unilever PLC issues 10,000 stock options to the employees of HUL, allowing them to purchase shares at a predetermined price of 200 rupees per option. At the time of the grant, the market price per share is rupees 300 and the options have a vesting period of 3 years. After the stock options vest and are exercised by the employees, Unilever PLC charges HUL 20 lakhs as the cost of the shares. Logic simple, 10,000 stock options into 200 rupees per option, 20 lakhs is the cost of the shares, which HUL reimburses on a cost to cost basis. Additionally, Unilever PLC charges HUL an administrative fee of 2 lakhs for managing the ESOP on its behalf. Assume the applicable GST rate on service is 18%. Now, first, determine whether the 20 lakhs reimbursed by HUL to Unilever for the cost of the shares is liable to GST. No. As per CBSE circular, whenever the holding company is allotting ESOPs to the employees of the subsidiary company, for which subsidiary company just paid the cost, that is not a supply. Then calculate the GST liability on the additional 2 lakhs charged by Unilever PLC as an administrative fee and determine who is liable to pay GST. With respect to additional charges for that ESOP, it is a supply under 7(1)(b) and chargeable to GST under RCM. So GST will be payable on that, what is the administrative charges? 2 lakhs. Compute the total amount HUL need to pay to Unilever PLC. 20 lakhs plus 2 lakhs, 22 lakhs. But the GST will be payable to government. So 2 lakhs into 18%, 36,000. Can the GST on additional 2 lakh be availed as ITC? Yes. We don't have any blocked credit. and it is used in the course or furtherance of business, so definitely they can take ITZ. GST paid under RCM can be availed as ITZ if the condition for availment of ITZ is fulfilled. Then next one, look into question number 4. This question number 4 is related to the renting. So see that Mr. Rahul, an individual registered under GST, owns multiple residential and commercial properties across different cities in India. In October 2024, he rents out the properties under different situations to various individuals and entities. Compute the value of taxable supply in the hands of Mr. Rahul based on the following details of the rentals for October 2024. So we need to just compute the value of taxable supply. First, renting of a luxury residential flat. It's a residential flat to Mr. Kapoor, a proprietor of a proprietorship concern for the personal use as his residence. What is your answer? Exempted. Whether Mr. Kapoor is registered or Kapoor is unregistered, it is exempted. If Kapoor is unregistered, also anyhow exempted. Even if he is a registered individual, also it is exempted because he is taking it for his personal residence. So this 40,000 will be exempted. Renting of student hostel in Pune to 20 students for a period of 6 months from October 2024. Period of 6 months means more than 90 days. And what is the charges? 12,000 per month, which is less than or equals to 20,000. Therefore, it will be exempted. Then next, offers PG accommodation in Delhi for 10 working professionals for a period of 4 months. For working professionals also, all accommodation for a period of 4 months. 4 months means definitely 90 days or more, and the charges less than or equals to 20,000 per month. Therefore, it is exempted. Renting of guest house accommodation in Bengaluru to a corporate company for its employees, and accommodation is used for consecutive 90 days. Even then it is exempted, because for a corporate company also they have not given like it should be for this person only, like that. All accommodation, it is accommodation only na? Yes. So 90 days, how much is the charges? 19,000. Okay, so which is less than or equals to 20,000. Renting of hostel in Chennai for 40 days, 40 students pursuing CA final for attending exam oriented batch on IDT of Mr. THARUN'S for a consecutive period of 60 days. What is your answer? Even though the charges is less than or equals to 20,000, but the number of days should be minimum 90 days. Here it is only 60 days. Due to that reason, it will be taxable, and it will be taxable in the hands of Mr. Rahul, supplier. Okay. Then next, renting of commercial property in Bengaluru to XYZ Limited, a registered company for office space, 1,50,000, definitely taxable. But sir, in case of commercial property, we have RCM only when supplier is unregistered. Here supplier is registered. Then offers PG accommodation in Kochi for 10 students who pursue a short-term skill course for a consecutive period of 90 days. Even though it is for a consecutive period of 90 days, but the charges is not less than or equals to 20,000. So that will be taxable. So in this case, first one, this 10,000 will be taxable, 40 students. So 40 into 10,000, that will be 4 lakhs. Next one directly 1,50,000. Last one 10 students into 25,000, that is 2,50,000. So the total will be 8 lakhs. Then look into question number 5. ICICI Lombard General Insurance provides coverage for the coconut palm insurance scheme, a government sponsored scheme. The scheme is exempt from GST under serial number 35 and 36 of notification. And this is a government notified scheme, therefore that insurance is exempted. In October 2024, to manage its risk, ICICI Lombard enters into the following reinsurance arrangements. Situation 1. ICICI Lombard cedes a portion of this risk associated with the coconut palm insurance scheme to General Insurance Corporation of India, another Indian reinsurer. The reinsurance premium for this transaction amount to 4 crores. See, as the main insurance is exempted, its reinsurance is also exempted. Situation 2. GIC-RE in turn cedes a part of the reinsured risk to Munich RE, a cross-border reinsurer based in Germany. This transaction, classified as retrocession, involves a premium of 2 crore. As the reinsurance is exempted, its further reinsurance, that is retrocession, is also exempted as per CBIC circular. So that is the answer for this. Then another question you see, question number 6, Air Europa Limited, India, the Indian establishment of Air Europa Limited, a foreign airline company incorporated in Spain, provides various services as part of its operations in India. The airline company imports certain administrative and operational services from its head office in Madrid, Spain, without any consideration. This is related to that import of services, that Indian establishment of a foreign airline company point. This service includes IT support, financial management, legal advisory service and staff training. Compute the value of taxable supply on which Air Europa Limited is liable to pay GST under FCM or RCM. Last line you see, what will be your answer in the above case if Government of Spain is not giving any exemption to Indian airline company operating in Spain. So now we need to divide it into two. First, if Government of Spain is giving reciprocal exemption, if Government of Spain is not giving reciprocal exemption. Now, starting with the first point. First, their outward supply you see. Outward supply is what? Passenger transportation, cargo transportation services. So they need to pay GST on that. For that there is no exemption. So whether we have any exemption for passenger transportation, cargo transport service of airline, no, that will be taxable. For airlines, what is exempted for transportation? Starting point, ending point in northeastern states or Bagdogra in West Bengal, or viability gap funding, that is not given. And goods also, if it is outside India to India exempted, that is not given here. So therefore these two services will be taxable, which is their outward supply. Whether Government of Spain gives exemption or not give exemption, for the Indian establishment GST will be payable on this at 18%. So see the answer, first two rows. So outward supply, passenger transportation, cargo transportation, 2 crores into 18, 1.5 crores into 18. So 63 lakhs is their gross GST payable under FCM on outward supplies. On outward supplies they only should pay. Next you see they have given inward supply. First inward supply, IT support services imported from head office in Madrid without consideration. Okay, so it is exempted provided if the Government of Spain gives reciprocal exemption. You can see here, support services from head office in Spain exempted as the same is imported from head office without consideration if Government of Spain gives reciprocal exemption. What if Government of Spain is not giving reciprocal exemption? Then in that case analyze, it is import of services for consideration or without consideration? Without consideration, but from a related person. So it will be supply under 7(1)(c). Is it OIDR or other than OIDR? Other than OIDR. Other than OIDR by non-taxable recipient? No. Air Europa Limited. Limited will not come under non-taxable recipient because they are not individual or trust or government. So other than NTR, and there is no reciprocal exemption. So it will be taxable under RCM. So they need to pay GST. What is the value given here? 25 lakhs. So 25 lakhs into 18%, 4,50,000. So import of other than OIDR by other than NTR exempted only if Government of Spain gives reciprocal exemption to foreign establishment of Indian airline company. Then next one, second inward supply, legal advisory services imported from head office in Madrid for consideration. For consideration there is no exemption. So this exemption of Indian establishment of a foreign airline company is applicable only in case of without consideration. Logic is simple. There is no consideration means no outflow. That's the reason why they have been given this exemption. If there is a cash outflow, they are not giving this exemption. So for consideration, no exemption. In both the cases, it will be taxable. Why, sir? It is from head office for consideration. Supply under 7(1)(b). And it is coming under OIDR, other than OIDR, other than OIDR by other than non-taxable recipient. Therefore, it will be taxable under RCM. So on 15 lakhs, they need to pay GST 2,70,000, 2,70,000. So sorry, 20 lakhs into 18%, 3,60,000, 3,60,000 exemption not available as the same is import for consideration. It is other than OIDR by other than non-taxable recipient. The next one, marketing services imported from Google Incorporation for a consideration. It's a OIDR service. It's not from head office PAP. That's why no exemption. So definitely it will be taxable. OIDR service always taxable. Who will pay? If imported by NT or it is FCM, otherwise RCM. Here it is Air Europa Limited. It's a company and they are registered in India. So why sir they are registered in India? See their outward supply are 2 crores, 1.5 crore. Definitely they will be registered here. So where is the question of not getting registered? Definitely they are registered. So therefore they will not come under NTOR. So they will be other than NTOR. So it will be coming under RCM. So 15 lakhs into 18%, 18%. Import of digital marketing services, OIDR services by other than NTOR. Next. So catering service received from a person in India, that is not under RCM. That's not import of service, normal services. So these are the only 3, and on this GST payable under RCM. So I told you while doing a 14 marks question, 4 statements we need to prepare. First statement is what? Outward supplies. Second statement is what? GST payable and inward supply. GST payable or inward supply under RCM. Third is what? ITC. Whatever GST you paid under RCM, you can take as ITC. On this catering service, can't we take ITC? No. Outdoor catering is a blocked credit. And 3 exceptions are there. Inward supply, outward supply, same category, not applicable. Inward supply, part of outward supply, not applicable here. And statutory obligation, not applicable. Consequently, ITC not available here on this catering service. So 6,30,000. Now computation of net GST payable. And you see what is there, ITC very less only compared to their liability. Their liability is 63 lakhs. ITC is just 6,30,000 only. So don't apply rule 86B. First, gross GST under FCM 63 lakhs minus ITC utilized. Here it is 6,30,000 and here it is 10,80,000 and RCM liability. So 63 lakhs and 63 lakhs will be taken as the net liability. Understood? So related to this point of exemption, they can make a question like this, connecting with other import of services, because it's high time. Import of services they have not at all tested in the last 3-4 attempts. So they can ask. Moreover, there is an amendment in that import of services. That's why I have given a possible question like this. They can coin a question. Next. So we are moving on to, so these are all the questions on amendments related to exemptions.